All right, guys, how's that? Can you hear me now? Yeah, I may have accidentally unplugged my headphones. Sorry, guys. Man, and I was so smart in everything that I said, too. Guys, I solved all the world's problems and not one of you heard it. Sorry about that. All right, let's get this thing going. Um, and what I said is, Cav, I wasn't correcting you. I wasn't trying to correct you on the pilot thing. But one of the great things about pilots when they become traders is they are accustomed to following a checklist. There's a very solid set of rules that they have to follow or people die. And that was the approach that my wife took when she started learning it. She's in the medical field, and if you just go all crazy, people die. So I was saying that there's a huge difference between being able to read charts and being able to follow rules. When you're a chart reader, you understand a lot of key concepts, but your chart reading gets you to the rules, gets you to following the rules. And what you'll find is that the better you become at chart reading, the more likely you are to deviate from your rules because it imparts these opinions. So we're going to focus a lot on rules today. We are going to become chart readers because you have to be able to understand when the rules are met. But we're going to take the same trades every time. We're gonna follow rules that give us an advantage. And I think that having a very set, clear, precise list of rules is what gives us a very key advantage in the market. And speaking of advantages, here's my segue. Let's talk about checking out news. Yeah, since they're your rules, they're not so bad, right? I've got to go through the whole, my sibling created these rules. So I've got to work through that. Guys, forexfactory.com/calendar every day. Today is Tuesday, March 5th, and at 9:45 there is some low impact final services PMI, but they're going to follow it up with the 10 o'clock entree of ISM services. There's a red box next to it, which means that it's a high impact, which means that it may create, really, for lack of a better phrase, an emotional response in the people that move the market. There may be somebody sitting on a mountain of cash saying, if ISM services is positive, I'm going long. If ISM services is negative, I'm going short, or vice versa. And the reality is nobody knows what this Yahoo's thinking. So when you see these high impact news coming up, 10 a.m., set an alarm, right? Write it down on a piece of paper. The best bet is typically just to sidestep it, go refill your coffee, toast a bagel, do whatever you need to do to stay out of the way. But I check news every morning to give myself that advantage, to make sure that I know when these things are happening. And then everything that I'm going to talk about today, guys, I promise you will be able to find in the education page. You'll be able to find it in the Discord resources. And I'm probably going to hand you everything that I use throughout the day. Hey, good morning. No worries, Grant. Post it up, man. We'll take a look at it right now. Did you already post? No, I've got Cav and Gino so far. Drop it in. I don't know, Cav. I've never been somebody with that much money. They do. They literally just say, "Hey, I'm gonna buy at Fibonacci support, but I'm not gonna buy a two lot that pays my mortgage. I'm gonna buy a 2,000 lot, right? And it may scale in, but institutions trade huge denominations. Um, I think the most I've ever seen anybody that's kind of an individual's trade is 100 lot. But there's more than that, and a lot of them use bots that put them in and get them out. But I don't know. You'd have to do a little research, play on the internet a little bit, and see what you can come up with. Guys, we're going to do two parts today. We're going to learn rules, and then we're going to look at entries and look at exits. So the first trade, you took a momentum style trade, Grant. You love that momentum style. I've decided that this is what I'm going to do with my kid, is momentum. When the triggers are screaming, break through, pull back, giddy up. And honestly, your first momentum is a little early. Grant, and I want you to look at it. Small triggers haven't broken the area. And guys, that's one of the keys to the momentum trade. And Grant, this will save you a lot of headaches, is if your trigger lines are below the area for all of you momentum traders, let them break and then buy the pullback. And then that's your rock star trade. So just a little bit early, great anticipation, just a little bit early. And then when this one pulls back with no divergence right to the area, you did get in a little late. That's okay though, because you took it right to the target. Grant, beautiful trading this morning. And I'm going to say it now because it's gonna ring in your ears all day long, ladies and gentlemen. Momentum for the win. Momentum for the win, guys. When you have momentum, life is easy. When you don't have momentum, it gets a little more difficult. Not going to lie. Even Cab's going to show us a great picture today when we start reviewing charts where momentum allowed him to trade into problem areas and take quick profits. So, Grant, I hope you have an awesome afternoon today. Beautiful, beautiful trades. Just a little bit early here. Just a little bit early here. But do you know how to fix that one now? Let the small triggers get through, then let it pull back. It's going to fix what ails you, brother. 100%. And then that one just couldn't do any better. Nicely done. And guys, this is what we're going to do today. We're going to learn some rules. Grant's got his rules. We're going to talk about when it's okay to trade. Absolutely. Yeah, we all do it. And Grant, that's that read versus rules. Man, hey, dead horse. The read is everything is going up. The rules say let the smalls break the area and then pull back. This is a great example of how your ability to understand where the market's likely to continue, likely to go, likely to stop, all these key concepts, you're going to be thinking about it. You're going to be anticipating your trade. And it's up to you guys to pull the reins a little bit and wait for the rules to be true. So, Grant, that was like the best example you could have ever given us this morning. Thank you for that. Hope you have an awesome afternoon, man. We'll see you tomorrow morning. Good morning. Miss Debbie, I had it written on a piece of paper to say happy birthday to you. I was going to fill the room a little bit more. Happy birthday to you. I would sing to you, but I like you too much for that. I've got the worst voice ever. That means the market's going to give it away to you today. Going to be like an ATM for your birthday. So guys, all the answers are in the education page. The tutorial section is where I get 99.9% of the stuff that I do. The software user guide is where if you need to work on your NinjaTrader functionality a little bit, maybe you need to get better at scaling charts, or maybe you want to put in those stops and targets, all that good stuff. It's all in the software user guide. And then I'm going to start my slideshow because slideshows make me happy. And I'm going to go laser pointer because laser pointers make me happy. And guys, we're going to talk about really the same thing that we talk about every day. We're going to talk about a high probability trend trade this morning. And we're going to do it because it turns you into a chart reader. And that's the first skill that Nexgen is going to help you master, guys. Because chart reading is where it's at, and we've been talking about a little bit today, guys. When you're a chart reader, it changes the whole dynamic. It changes the whole dynamic of what you're able to accomplish. When you're a chart reader, you're going to understand where the market is likely to continue, likely to go, likely to stop, and you're going to build a plan around your ability to read charts. And the chart reading that we're doing this morning is going to focus heavily on trade entry precision. We're going to use a high probability trend trade, which is a trade when every indicator on every chart agrees for the trade. I mean, it is the best of the best. And you're going to understand where the market is likely to continue, and that's going to be your entry for this high probability trend trade. The high probability trend trade teaches you these concepts. It teaches you to be the chart reader, and then your chart reading is going to have you building a plan that goes outside of that very basic trade, that remedial, that 101 trade. Guys, I'm going to start incorporating these momentum trades into the classroom as well. We're seeing a lot of them. We're seeing a lot of success with them. So we're going to work those in as well. And then the second step is going to be trade management. And I'm going to say this now for you guys that are working through a couple different types of trades, is every trade is going to have a different type of management. If you were in a high probability trend trade, you are going to manage it like a high probability trend trade. TLC, if it sets up live, I don't mind at all. But the rules don't change whether you're live or whether you are on looking through pictures. And honestly, looking at pictures makes it easier to catch it live. But we'll look for it. If it happens, we'll do it. No worries at all. But first, we're going to go through all the rules and make sure that we know what we're looking for. And then once you figure out entries, guys, you're going to learn to manage trades. And of course, being able to read your charts is going to be a huge part of that. So let's go to my favorite slide. The quickest way to get to where you want to be, the fastest way to become a confident trader, guys, it begins with posting your trades in class. I can't stress this enough. Show me what you're doing, but more importantly, tell me why you're doing it. Tell me what's going on in your head to get you into that trade that fights the triggers. Tell me why. No, see, and TLC, I will respectfully disagree with you with that. And let me show you why. When your small triggers are outside of the large triggers, that's strong triggers, right? And we're going to go back and forth to live, and I'm going to show you how it's not a false sense of security. Because what you're going to be able to do is, because you know exactly what it's supposed to look like, you're going to be able to anticipate your entries a little better. So I'll show you. Trust me, I'm going to put it all together for you. But guys, every time you post in the room, annotate your charts. Tell me what you're thinking. Tell me why you're doing what you're doing. And then what I'm going to do is I'm going to give you feedback. I'm going to talk to you. It's like a private session. We're going to talk about the advantages that were present. We're going to talk about the disadvantages that may have reared their ugly heads. We're going to focus on your entries. We're going to focus on your exits. And guys, together we're going to create this awesome plan that's going to help you turn your chart reads into trades that suit your needs. And then the second thing is use your spreadsheet, guys. Nexgen gives you the spreadsheet. I'm going to drop mine in the room right now. There's zero excuses to not have this spreadsheet. But the spreadsheet, the first page is your trade journal. There's 3 tabs on the spreadsheet that I just gave you. The first tab is every time you take a trade, it goes in here. So Gino, when you took your trade, it goes in your trade tracking sheet. Cav, that trade you took should go in your trade tracking sheet, because you're going to study it tomorrow and you're going to talk about what worked and what didn't work and what felt easy and what felt forced. And this little study each and every morning, guys, it's going to prepare you for the day and it's going to accelerate the learning. It really will, because you're going to start every day with this clear vision of what it is that you want to have happen. But you've got to annotate your charts. Do I have my chart annotation over here? I don't know if I have it anymore. Nope, I don't have that picture anymore. You have to annotate your charts so that you know why you did what you did. And then your second tab is every time your rules are met, every time you have those advantages in place and you take a trade, I want you to go back and I want you to put it in your personal trade setup looks. Because these are the pictures that's going to get you focused on the best of the best. The first tab is going to have you recognizing the good and the bad, the things that are helping, the things that are hurting. The second tab is nothing but the good. So you should go through and you should have 100 pictures of your best trade here. And you're just committing it to memory. And TLC, I'm going to backtrack to what you're saying. If I click on this perfect long, momentum is undeniable. And it's a simple look, whether the market is moving or not. Not reaching an area is also undeniable. It's a simple look whether the market is moving or not. And then if I come over here and I look at my entry TLC, I can see that the price pulled right back to a mid-band, right at triggers. And it's like, oh my gosh, that's it right there. But the cool thing is if this is what has to happen, when the market's going up, you can already decide where it has to pull back to. And you'll find that you get good at that if you go through the routine of looking at pictures. And then on the third tab is 300 pictures plus. It has high probability trend trades, medium probability trend trades. It has entry sequences for long and short. So once again, TLC, this talks you through the exact process. This is like teaching you to tie your shoes, one lace over the other, and you can go through it and get to the end of it. And then it also talks about management and the NASDAQ and patterns that repeat themselves and termination conditions. And there's a wealth of knowledge there. And if you ever look at one of those pictures and you're not sure what's going on, take a picture of it, drop it in the room. We'll talk about it. So we're going to focus on the trigger lines and the rules for when it's okay to trade. Excuse me. We're going to focus on the high probability trend trade, guys. The trade that typically wins 70 to 80% of the time. The trade that creates confidence through the memory of success. And all the other trademark terms that I talk about in the room. The high probability trend trade will turn you into a chart reader. And that's the goal. It's not the trade that is the only trade you're going to take, because honestly, it doesn't happen enough for most people. But you're going to learn these advantages, and they're going to help you take the trades. You guys simulate, practice, break eggs, make omelets, all those things that you have to do. So while you're learning, guys, there's no risk of loss of capital on simulator. If you're participating in class, you can't lose money. All you can do is get smarter. And we're going to focus on you guys taking the correct trades, the advantage trades, not the ones where you get lucky, because anyone in this room that has ever done it will tell you that luck tends to run out once you go live. We're going to simplify heavily. We're going to look at a high probability trend trade, and then I'm going to introduce you to what we call a medium probability trend trade. And the high probability trade is the one where every indicator on every chart agrees for the trade. Guys, you won't find anything wrong with it. And then the medium probability trade means that most of your indicators agree with the trade. However, an issue exists. Your ability to read your charts is going to identify that issue. And those trades need to be managed a little differently because they're not high probability. Those trades need to be assertive exits, quick profits, getting to break even. So understanding what kind of trade you're in is going to have you understanding what sort of management you need. And then these two simple trades are going to be given to you in a rock solid plan to optimize your chances of success. And then here we go again. You must learn the looks so that they're easy. What are the looks that you're going to commit to? Guys, 300 looks, right? Here's a perfect short. And it looks exactly, let me pull this up, like another perfect short. In TLC, part of what I was getting at is if you look at this, you literally had 2 minutes before it got to the area inside of favorable large triggers. From the time of the reversal bar until the time of impact, it's almost 2 minutes. Some cases it's 30 seconds. Some cases it might be 3 or 4 minutes. But when you see exactly what it should look like, it makes it easier when it's live. But we're going to find some live examples today. I feel good about it. But this is our plan, guys. We're going to focus. You guys are going to trade. You're going to drop pictures in the room and tell me why you're doing what you're doing. And we're going to talk about a high probability trend trade. We're going to talk about a trade that wins more than it loses, that provides a statistical advantage. We're going to talk about a trade that's going to make you feel so darn good about things, you're going to become confident from that memory of success. And there's only 3 rules for the high probability trend trade. These 3 rules each create an advantage. The first advantage is momentum. Don't trade without momentum if you want the best chance of success. I won't tell you how to trade, but I will tell you that momentum, and you're going to see it a lot today, momentum for the win. You're going to hear me say it all day long. The second rule is going to give you a clear path, nothing between you and your target, which means that there's nothing to create a bounce, nothing to create problems. And that clear path is essential because you're going to take that momentum and you're going to ride that wave. And you're going to do it from your entry area. And the entry area is your third advantage. That's getting into the market where the market is most likely to continue. So every time you look at your charts, I want you to talk to yourself. Do I have momentum? Do I have a clear path? And if I do, well, then I should go look for an entry area. And if you keep it simple in the beginning, there's 2 options for the brand new user. It should be 2 options for any trader. Either my rules are met or they're not. One of them gets me into the trade. The other one keeps me sitting on my hands doing absolutely nothing. These three rules happen on only two charts, and I'm going to put my laser printer underneath the first bar on the large chart, the broad stroke of the brush, showing you the overall temperature of the market. The large chart through the first bar will define direction, it will define momentum, and it will define areas. Guys, rules 1 and 2 have to happen on the large chart. They must be true to ever look for an entry. So the reality is, if you find yourself looking for the entry first, you can minimize your second chart. You can take it out of the equation until the rules are met on the large. But on this most current bar, you'll be able to understand whether the market is going up or down, whether or not rule number 1 is met, providing you the advantage of momentum, and whether or not rule number 2 is met, providing you the advantage of a clear path. When it's met, we're going to go to the smaller, faster chart. We're going to take this one bar and we're going to turn it into 15 to 30 bars. And those 15 to 30 bars are the pullback to an area inside of triggers, guys. It's this refinement process that gets you where you're able to buy low and sell high. And that allows you to reduce your risk, to increase your profit potential. And that's rule number 3. But we have to have rules 1 and 2 in place first. And rule 1 says that I must have strong trigger lines. Guys, strong trigger lines save the day. Strong trigger lines break areas. Strong trigger lines cover mistakes or enhance your chances of success on lower probability scenarios. So strong trigger lines on the large chart, guys, they can't happen if you're not trading with the trend. It's impossible to have strong trigger lines if your trigger lines don't match the background color. So if the background color is green, the market's going up, only looking for rules to be met for high probability trend trades long. If the background color is red, it's going down. We're only looking for rules to be met for high probability trend trades short. And then once we have that color, we're going to make sure that we have strong triggers. Strong triggers provide the advantage of momentum. Strong triggers can break key Fibonacci areas. Strong triggers can hide mistakes. And strong triggers in an uptrend mean that both your small triggers, the solid lines, and your large triggers, the dashed lines, guys, they have to be the same color as the background. If they're not, you don't have momentum. You don't have strong triggers. And then the second part is that they need to separate. So the large triggers have to be wide, angled in the direction of the trend. The small triggers have to be wide, angled in the direction of the trend. And it's the space between the two that lets me know that the odds are favorable for the market to continue up. Odds favorable momentum. You're going to hear it in class all day long. That's the best of the best. Odds favorable momentum should drive your desire to be in a trade. Because when I have strong triggers, I'm going to buy a pullback on a smaller, faster chart. And to the downside, when the background is red, my large triggers are red, my small triggers are red, both are wide, angled in the direction of the trend. The space between the two, like scissors open, ready to cut, lets me know that the odds are favorable for the market to continue down. When I have strong triggers down, I'm going to sell a pullback to Fibonacci resistance on a smaller, faster chart. On the large chart, it looks like a tail or a wick, depending on what you want to call it. On a small chart, this little wick is 15 to 30 bars, guys, and you're going to pinpoint exactly where the bottom or the tops of those tails are likely to happen. Is everybody cool with strong triggers? Everybody feels all right with it? Let's look at the NASDAQ. Let's get some live examples of strong triggers. Small separated from the large, larger wide, angled down. Can you give me a Y in the room if you see it? That's some strong trigger lines. Sell a pullback. Strong trigger lines, sell a pullback. Strong trigger lines, sell a pullback. I am like a broken freaking record. Strong trigger lines, sell a pullback. Strong trigger lines, buy a pullback. And I'm telling you guys, this is the recipe. So I want you guys to start studying this look. I want you to go back and every time you see a tail with strong triggers, I just want you to circle it. And we're going to see what it looks like on the smaller, faster chart. And that's odds favorable momentum, guys. That's the best of the best. That's the strength that carries us to the next area. If you literally spent 10 minutes scrolling back on a couple different markets, you would be floored at how often the market continues in the direction of the trend with all that momentum. And you would say to yourself, wow, I really trust this look. I like this momentum look because when my triggers are the strongest, that's the best look. And I'm going to sell a pullback to Fibonacci resistance without hesitation. And then when both triggers are down and one line gets in, the scissors begin to close. This is the first sign that momentum is slowing. Short trades can be taken, but they have to be in agreement on all the other charts. And then when your small triggers work their way inside of the large triggers, you have a weakening or a slowing of the trend. Anything can happen is the term you're going to hear in class, guys. Anything can happen triggers. These are odds favorable. These are anything can happen. This gets me excited about the short. This gets me a little leery of the follow through. You can still take short trades, but you got to manage them a lot more aggressively. And then when those weak triggers, this is the exact look, right, Cav? When these weak triggers hit an area, well, that area is more likely to hold. That area is more likely to reverse the market. Look at that. Looks just like the picture, doesn't it? This is today. This is God knows when. It was 2023 at least. Probably around May. This is about 8 or 9 months old. Same look. So guys, commit to momentum. Commit to the idea that strong triggers save lives. Strong triggers push a market in the direction of the trend. And go back and study it. Study that look. Commit it to memory. My favorite pictures from you guys are when you show me a picture, and I'm going to show you. I'm going to go to my library real quick. When you're just sitting around, you're like, you know what? I need to be a little smarter today. So I'm going to go back, and every time I see strong triggers, I'm going to circle the tail, and I'm going to remind myself, strong triggers down, sell a pullback. And do it long shorts, guys. Commit it to memory. Know what it looks like in when it's still, so that you can catch it real time. So rule number 1's been met. We have strong triggers. We've identified the direction of the trend. Rule number 2 says termination conditions false. Not trading into areas likely to stop the market. Again, this is for the highest probability trend trade that you can take. You're going to find every now and then it's okay. You're going to pull it off. But for the new user, make sure that you have room to your profit targets. And this also happens on the large chart. So now we're going to kind of piece it together from the most current bar. The large chart says it's going up. The large chart says that we have momentum. Does everybody see that? In this one bar, not only do I have direction defined, but I also have momentum defined. And now I'm going to make sure that I'm not trading into areas. Areas are defined on the large chart. And rule number 2 says don't trade into an area. Don't trade into a termination condition. And a termination condition is an area that may reverse the market. And these areas are where decisions are made. Guys, I'm just going to give you this picture. I should probably put this one into the slideshow, but it's not there. Areas that may reverse the market, and it's based on a comparison of the Fibonacci area, blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, a cyan divergence low line, a magenta divergence high line. Guys, it's a comparison between the areas and those same triggers that give you strength. And strong triggers have the potential to break these areas. Weak triggers, like we just saw in the NASDAQ, are less likely to break through. But you've got to learn the recipe for when it's a termination condition. And you do that by letting price reach the area. These dynamic Renko bars, these are price for all intents and purposes. Price is represented through the dynamic Renko bar. When the Renko bar hits Fibonacci support, price has reached the area. This sets off the decision-making process by the people in charge because there may be sellers that are exiting their position there. There may be buyers that are wanting to enter a position there. And it's not uncommon to see the market, quote unquote, fight at key areas or to see strong bounces off of key areas. So you guys can keep yourself safe by saying if price reaches Fibonacci support, I'm going to check my trigger lines. And if they're not below the support, no more short trades on that small chart. And guys, the recipe for terminations is simple. Price must reach the area. Set off that decision-making process. When price reaches the area, where are my triggers? Well, they're all below, so I'm not going long. Hey, Jen, how was Dubai? Hope it was great. Welcome back to the room. I just saw you in there. Price reaches Fibonacci resistance, triggers remain below, we're not going long. And then they push all the way down to support, all the way down to that mid-band area, and the triggers remain above. I'm not going short. Remember when I told you 90% of your day is reading your indicators? Can't go long into resistance, I can't go short into support, and my large triggers are a full bar away. Look at the distance back to the large triggers. These triggers are moving averages, guys, and price loves to return to the moving average. We use that to our advantage all day long. So if price hits an area and the triggers are a full bar away, these trigger lines act like a vacuum. You can hear a sucking noise as price pulls right back to them. So no longs, no shorts. There's a divergence high at the fib as well, guys. This magenta line that prints off of a pivot means that there was a loss of momentum. It means that sellers stole the momentum from the buyers. It is not a termination condition. It's just a loss of momentum. But when price reaches that divergence line and the triggers remain below, now that divergence line is a termination condition. Now this is an area that may reverse the market. So from support, price comes to Fibonacci resistance, the divergence line, and a second resistance. There's those weak triggers into the area. Guys, this is 3 terminations in the same area. The pivot stop out is when price trades above the divergence line, then back below. No long trades, guys. And if Fibonacci resistance is there as well, it adds power to the top. This termination condition creates a reversal in the market. It gives you large triggers that are red, small triggers that are red. Any termination condition that has no triggers through it, that reverses the market, is what we call a strong top. And I want you to see this. Termination condition, full reversal, this is a strong top. And it's a great top all the way to the termination. And then it pulls back up. And now this is the one that gives me momentum. You see the separation between the small and the large? This is the one on that most current bar. It hasn't reached the next area. My path is clear. You guys are going to pinpoint right at where the top of that tail is, and that becomes your entry for the highest probability trend trade possible. So is everybody good with the basic concept? If price reaches the area, the triggers remain above, let's sit on our hands and do nothing. Let's wait for the reaction in the market. Well, when is the path clear? When the small triggers and the large triggers get below support. Guys, this is important. The small triggers, both lines, and the large triggers, both lines, get below the area of support. Now the area is broken. The path is clear. Support becomes resistance. And that path remains clear until price reaches the next area. So if I have momentum and a clear path, this tail represents my highest probability entry that I can take. This is the one with all of the advantages, and you guys are going to pinpoint this tail. So price reaches, no triggers break through, no trade, guys. It's a termination condition. Small and large break through the area. The area is broken. You'll see that resistance behaves as support. We're looking for the short trade. Those are your two options as a high probability trend trader. It's either broken or it's not. It's either clear or it isn't. I'm going to introduce you to a third scenario. And this is going to be your first medium probability trade. When your small triggers break through the area, typically 2 to 3 points, they should smash through that area. If they smash through the area, but the large triggers haven't made it yet, this support has the potential to break, but it's very reliant on odds favorable momentum. It's very reliant on that best of the best strong trigger look, because strong triggers can break areas. I'm going to give you a plan that teaches you how to capitalize on pullbacks when the area has the potential to break. And we're going to do that. That's called a 50-50 look. 50% of your triggers are through, 50% are not. And then one more look at why we don't trade into areas, guys. Price is screaming down. You can see that it broke support above it, and it goes head first into these yellow 1-to-1s. And when it does, I have 26 people in this room that just asked themselves, where are my trigger lines? And the trigger lines remained above the 1-to-1s, and I have 26 people in this room that chose not to go short. Well, 25, you know who you are, other person. And thank goodness that they didn't, because look at the bounce, guys. Look at the bounce and look at the ensuing fight for 45 minutes between the buyers and the sellers. Price reached the area, the triggers didn't break, and the rules-based trader says no more short trades. It pushes all the way up to resistance and beyond, and the triggers remain below. That's a termination condition. I can't go long. My trigger lines are different colors. I don't have momentum. Guys, rules 1 and 2 are just out the window here. No reason to look for a trade just yet. But eventually, after about 45 minutes of buyers and sellers fighting, all of my trigger lines get above resistance and they begin to behave as support. That's your clear path. The momentum is present. That's rule number 1. And then there is your pullback to an area inside of favorable large triggers to get you going. TLC, we don't count it as a resistance line. A magenta line is not resistance. A magenta line represents a loss of momentum. That's all. When you see the magenta line, it means that there was a loss of momentum right here. And it is a 100% exact line in the sand. It's not an area. It is just a straight up 100% line in the sand. So that's a great question, by the way. When the market has a divergence lower high, when that line prints, it represents a specific point in the market where not only could the in control force, so if the buyers are pushing up, they're in control, or the sellers are pushing down, not only could they not push any further, right? They went as high as they were capable of going, but they also lost their momentum there. So it's like this line in the sand. And it's not necessarily resistance, but the rules for termination conditions say that when I reach that line in the sand and the triggers don't break, it's a termination condition. So you could say that it behaves as resistance, but resistance, for just the sake of consistent terminology, resistance will be this red Fibonacci. This will be your divergence high, and I suppose you're probably right. It may behave as resistance if the triggers are below. It's an area that may stop the market, that may reverse the market. Thank you for that question. That's a good one. But it's the trigger location, right? You could call it just Steve. And if the triggers remain below Steve, Steve may reverse the market. Probably a horrible analogy, but it is what it is. No trade. Stay out of the fight. Take the best of the best. Momentum and a clear path take you to the next area. Guys, this is all we're working on right now. We're piecing it together to be able to learn how to buy low, to learn how to sell high. But sometimes the market doesn't turn, or doesn't give you an indication that it's turning. This slow moving train that the large chart is doesn't show you that change that you see on a smaller, faster chart. So we're going to use those divergences, those losses of momentum, and we're going to use them on a smaller, faster chart. This is the only termination condition that I give any credit on a smaller, faster chart. Areas are defined. Problematic areas are defined on the large chart. Areas on the small chart are going to be used for entry. So the only termination condition that I give any credit on a smaller, faster chart is 3 divergences in the same price range. Guys, this is a deal breaker. This is rule number 2 not met. So if the market comes down, prints a divergence, who cares on the small chart? Prints a second divergence that's lower, I'm not worried about it. Third divergence, I'm not taking that next short trade. 3 divergences in the same price range may terminate the trend. It becomes more powerful, guys, if those small triggers work their way inside of the large. That weekend, that anything can happen look. And it's more powerful still if the third is higher than the previous. This creates a head and shoulders pattern. Or the third is lower than the previous. This creates a head and shoulders pattern. So guys, all we're talking about right now is termination conditions. So if three divergences print in the same location on the smaller chart, rule number 2 is not met. I do not have a clear path. You're going to see this at a low and this at a high, and it's going to allow you to recognize a little quicker when change is happening. You won't see it on the large chart, but you'll see those three divergences and not take that last long. You'll see those three divergences and avoid that final short. So lines on the large chart define areas. Divergences on the small chart can give me a termination condition. So is everybody cool so far? Let's go take a look at our large chart again. Price, gosh, if you don't believe in fibs, you will. Price reaches Fibonacci support. Not one of the triggers break through, and I want you guys to look at the bounce. And even with odds favorable momentum, not one trigger line gets through resistance, and I want you to look at the bounce. It has the potential to, doesn't it, TLC? Which trade did you lose, Cav? Into resistance? Good. Not good. I'm sorry you lost. Having a respect for termination conditions. There it is again. Right into those one-to-ones. Right to resistance. Continuing down. There's your 50-50 that broke and dropped. There it is. Broke and dropped. Support with weak triggers. All the way up to resistance. Down it goes again. Guys, you're watching the market literally in the NASDAQ respect the ever-living snot out of these key areas. And the cool thing is you guys know where it's at. And TLC, look, 1, 2, 3 divergences. It didn't stop the market cold, did it? It just gave it a big shove up. That's a termination. And then eventually it breaks. And down it goes, and you look for an opportunity. So 3 divergences in the same price range, guys. Sit on your hands. Hang out. Price reaches an area, no triggers break. Sit on your hands. Wait it out. Right? And look at that. Another termination condition. Holy smokes. Guys, rule number 2 is going to keep you out of so much trouble if you just let it. If you just let it. So let's go back to our 2-chart setup. And we're going to go back to the first bar on the largest chart. The large chart has defined direction. The background is green. The large chart has defined momentum. The smalls are above the large are wide. This space between the two triggers lets me know that the odds are favorable for this market to continue up. And now the large chart has defined areas. We have cleared resistance, both triggers. It's behaving as support. And I haven't reached resistance, which means that this is a target, not a termination. Guys, give me a Y in the room if you're with me. Rules 1 and 2 have been met on the most current bar on the large chart because this is important to finding your entries, making sure that the advantages are in place. TLC says, yep, Mark, I got it. Let's talk about those entries. When everything says up, guys, you're about to learn how to buy low. That's it. And when everything says down, you're about to learn how to sell high. Guys, this is the process that gets you in at the best of the best. This is the process that reduces risk, that increases the profit potential. And rule number 3 says we are so darn specific with where the market is likely to continue that we're going to use a limit order. We're literally going to wait for the market to come back to us, and we're going to use that limit order at an area. Fibs, midbands, yellow 1-to-1s. And this is where I want to remind you guys that areas on the large chart present problems and targets. 10K. John's not in here. In his room, you can't see it. I don't think he's starting until later today, if I'm not mistaken. Tuesdays and Thursdays. He did start. All right, I just told him He rebooted the room, then nothing. Okay, I just told him, so we'll see if he can get it going. You may want to try the same thing, 10K, to reboot and see if that helps you. No worries. I sent that message over. If it keeps up, let me know. I'll make his phone ring. So guys, we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Areas on the large chart, those fibs, those yellow 1-to-1s, guys, all those are going to be problems for us. We're going to use those areas as bounce points. But the key to the success here, for you guys that are learning entries, and I've already seen this a couple times, trades come from areas and triggers, not from triggers, not just from areas. It's the combination of the two that gives you the highest chance of success. And it's important that you understand that, because I see people a lot taking trades at triggers with no areas and getting run over and thinking that they followed the rules. And I also see people taking trades from areas without the triggers, getting run over thinking that they followed the rules. So we're going to be very specific, guys. And TLC, it's everybody at least once. This one bar, can everybody see where my laser pointer is? This one bar is giving me the momentum, the potential to break. Everything says down. At the bottom of this bar, guys, you're thinking to yourself, man, it's too late. I'm not getting paid. But we're going to wait for a pullback on a smaller, faster chart. The beginning of a pullback is the bottom of the bar. The top of the pullback is the top of the bar. Here we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars to get to the top and about another 10 bars to get to the bottom. 20 bars, but it's the x-ray of this one bar. And guys, this is how we do what we do. We're going to buy or sell a pullback at an area inside of triggers. So we do that, and let me say it one more time for you newer folks. When the large chart says that I have momentum, whoops, that was not a picture. Hold on one second. When the large chart, I'm trying to pull up that 2-chart picture again. When the large chart says that momentum is its strongest, when the large chart says that there's nothing in the way, this is the look, right? Everything's up. I'm not waiting for a tail. On my small chart, I have to wait for that reversal bar. In TLC, I think this is how you're going to be able to pinpoint. Because if the large chart has momentum and a clear path, you know it right here. But you're being patient and you're waiting. Thank you, Adriana. Low impact news right now, high impact in 15. Thank you for that. And TLC, would you agree? You know that the momentum and the clear path are present before the pullback ever happens. And now we're just training ourselves to be patient to wait for the reversal bar. And at the time of the reversal bar, find your triggers, large and synthetic. The tighter they are on top of one another, guys, the better the chances of having low risk. The tighter they are one on top of the other, we call this favorable large triggers because there's just not a lot of space in between them to shoehorn in areas. And trades come from areas, not from triggers. So your window of opportunity, the point where the market is most likely to continue, will extend in a long trade from the highest point of support to the lowest point of support. And guys, all caps on your chart every time. Inside of favorable large triggers. Inside of triggers. This fib is outside of the triggers. That's not a part of the equation. The pullback starts. I look for my triggers. I find my areas. The cyan box. That's it. From the mid-band to the yellows. And we are going to activate a limit order at the top, Rob, because that large chart is absolutely screaming to the upside and it has nothing to bounce off of. So we're going to get in at the top. Well, if the triggers aren't overlapping, well, then you run the risk of them going to either trigger. The triggers are a correction point, TLC. And the tighter they are, the lower the risk, the easier the trade. The wider they are, the more indecision that there is. I don't know if they're going to correct to the large or the synthetic. So if I get in up here, my my risk is huge because I just don't know. Does that make sense? That's where you get killed. So I want you to embrace the phrase. Let me get you the picture. I want you to embrace the phrase favorable large triggers. Favorable means that they're one on top of the other like snakes riding piggyback. Favorable large triggers give you the least amount of risk because they give you the absolute tightest point. The tightest point. You just can't fit a lot of areas in here because they're so tight on top of one another. Does that make sense, TLC? I love it when we have great lessons. Go in the other direction, guys. Everything says down on the large chart. The momentum is strong. The path is clear. I'm waiting for the reversal bar. At the time of the reversal bar, I'm looking for my triggers, one on top of the other, tight as they can be. And I'm looking for the areas within. And I only have one area this time, which means that I have one point, one line where the market is most likely to continue. And I'm going to activate my limit order just below. Trigger lines are a moving average. Moving average is where I expect the market to correct. I have to give the market something to bounce off of. I want you to think of trigger lines like clouds. The market may return to them, but if there's not a bounce point, I'm not going to risk my money on just bouncing off a trigger. I want something solid, like a tennis ball getting chucked, and then it hits that mid band and down it goes. It gives it, so it's like a wall for the market to bounce off of. And when it's inside of triggers, guys, it's the perfect storm. These one-to-ones, these fibs, they're outside of my window of opportunity. They're not inside of the triggers. This is the only spot where I anticipate that market to go down. So when you put the two together, everything says up, the path is clear, everything is strong. And guys, look at how far it is to get to that divergence high. There's like 4 or 5 ticks to get there. New users say, well, Mark, I don't have room to the target. I'm not going to take a trade for 40 bucks. Anyone else done that? I'm so close, I'm just not going to do it. And this is why I remind you guys that you have the ability to buy low. And if you wait for the pullback and you create the window and you get in at the top of it, that $50 turns into $250 potential because you're taking the pullback. And again, it's just that 2-part process, guys. This is why I want you circling tails on the large chart. This is why I want you going back, identifying momentum, circle a tail. Because if it lines up with support inside of favorable large triggers, guys, this is your best of the best. This is the picture that needs to go into that second tab. This is the picture that needs to go into your personal trade setups. Because this is the one that typically wins 70 to 80% of the time. Notice that weak triggers into resistance. You guys knew where the market was likely to go. What an awesome target for a wonderful trade. So the large chart leads the way. Momentum, clear path. You can do this class in 4-lane traffic at 70 miles per hour every time. Every time, Rob, you're going to pick up something new. I still learn every day, guys. I'm not going to lie. Pullback. Window of opportunity in at the top. And guys, here's one of the greatest things. So there's this old thing. If you can, when you're maturing as a trader, when you're becoming a solid trader, a confident trader, one of the biggest things that you'll notice in successful traders is that they manage their risk before they ever manage their profits. They're managing their potential losses before they ever try to take profits. And you guys are managing your risk with odds favorable momentum, with that loaded freight train that's hard to stop. You're managing your risk with a clear path. Nothing to create a bounce on that large chart that leads the way. You're managing your risk even more so with that pullback to support, that pullback to resistance. Because when you can identify where the market is most likely to continue, when you can draw that box and then you learn to trust it, your initial stop, guys, your protective stop, your risk management is only 4 or 5 ticks above those trigger lines, above that highest point in the window. Because if the market goes beyond that correction point, if it goes beyond that bounce point, it's okay to say, I don't want to be in that trade anymore. And you will take losses. Anything that wins 70 to 80% of the time, guys, it's obligated to lose 20 to 30% of the time. You will take losses. ticks, TLC ticks. Because if the market comes in and you're in at resistance, 8 ticks isn't a lot of money to lose on a high probability trend trade. 7 or 8 ticks isn't a lot of money to lose on a high probability trend trade, especially if it's winning 7 or 8 out of every 10. So guys, when you understand where the market should continue, you understand where the market shouldn't go. This is your first stop. And then when there's a reversal bar in the direction, you're going to reduce that risk even more. And you're going to find yourself in trades with 2 or 3 ticks of risk, maybe from a short, from a long. And then here's the hard part, and this is your first management lesson. If it gives you a reversal bar in the direction of the trade, don't let fear extend your stop. Keep it right there. Lose $20, $30. It's okay. It's a normal part of a positive equity curve. And then wait for the next best trade. And what you see on new users so often is that they'll get in and the market will say, I'm doing what I'm supposed to do. And the market will say, move your stop. And I see people getting stopped out for $200 or $300 because that little devil on their shoulder starts tapping them and saying, hey, guess what? If it goes from here, you're going to make more money. If it goes from here, you're going to make more money. If it goes up from down here, you're going to be so sad that you lost. But the reality is, guys, is we trade a statistical advantage. We trade the idea that every trade we get into has a manageable amount of risk. Every trade that we get into has an area where it should stop, where it should continue. See the split triggers, TLC? And it went up to the second one, didn't it? There's a mid band. And guys, this is NASDAQ. If you fight mid bands on the NASDAQ, or if you fight small triggers on the NASDAQ, it's a recipe for failure. But if we go back and we start looking at these, price reach resistance, the triggers didn't break. I'm not doing anything here. And look how rule number 2 will ruin your day. This was a beautiful long. Right into a termination that pulled you back to support. When you got to support, the large triggers were a full bar away and the market continues up. Not a clear path yet, and it pulls all the way back to the mid band, and then it goes to the next area where it pulls all the way back to support in the mid band. The large triggers don't follow, and it goes right up to the next area. Guys, we're going to find our opportunities in between the areas that are ruining people's day. Support breaks, right back to resistance. Strong triggers, down it goes. So let's see. All right, TLC. I think there might have been a good, here, we'll do this one, it's closer. So I'm going to pull up 2 charts because I remember this one. This was a good looking trade. In TLC, I don't want to cloud you with anything. So I'm going to take everything off, guys, and we're going to trust momentum. That's it. Are you guys cool with that? All we're going to do is trust momentum for a second. Because we got to learn how to enter the market, guys. We got to learn how to manage that risk. Got to learn how to identify the point where the market is most likely to continue so that we can capitalize on it. So TLC, and everybody in the room, especially all my newer folks, Roku and Jen, and who else is new in here? Bob L., I want you paying attention as we get it back. Arnie, even Tony the Tiger just jumped in for this lesson. Large chart leads the way, right? Large chart says that the market's going up. Grant, you said you were leaving. We can't have this emotional roller coaster, Grant. There's got to be honesty in the relationship. Back from Dubai. It's nice to see you, Jen. I hope you had a great time. Short meeting? Right on. Whoa. All right, guys. Rule number 1 says that the large chart is going to have strong triggers. Small triggers above the large triggers. Large triggers are wide. Can everybody agree that rule number 1 is met on the large chart? And then just for grins, we'll do build a fib. All right, so the second rule that has to be met is that price hasn't reached an area. That I haven't reached Fibonacci resistance, yellow 1-to-1s, a divergence high line. Does everybody recognize how rule number 2 is met as well, guys? I have strong triggers and a clear path. Is it okay to go to my small chart to look for an entry now? Has the large chart done what we need it to do? What do you guys think? Absolutely it is. TLC, thank you for asking that question. Hold on, let me show you the picture. Let's do it again. You ready? TLC, that is 4 ticks from trouble. Do you see it? 4 ticks from trouble. Is that enough room? Yeah, we all do, Arnie. What do you think, TLC? You like it? 4 ticks? That's scary, right? It's right up on it. You're like, I'm almost there. And this is why you have to go through. TLC, this is why you have to take those pictures. There is no false sense of security. Because if you take 100 pictures, brother, what's going to happen is you're going to remember that we buy pullbacks, that we don't get in at the top of the bar, that we wait for the pullback to support. This 4 ticks is really $250 worth of potential from your rules-based entry. So does that pink line scare me? Not a freaking bit. On the next bar, when it hits it, now I don't have room. But if you haven't reached the areas, dude, it's a target. Because we're going to increase that space dramatically with a pullback on the smaller, faster chart. Does that make sense? Great question, man. That was a great question. So even if I put this right here, we haven't made it, and we're looking for the pullback. So guys, rule 1 and 2 are met. Rule 1 and 2 say, let's look for an entry. So we turn our attention to the smaller, faster chart. And everything's going up. Grant got long right here, but we're talking about trend trades. And the market's going up, and it's going up, and it's going up. And right now you're going, oh, it's going without me, and I'm never going to get a trade, and this stinks, and how am I ever going to get paid? And it keeps going up, and you're like, oh man, my wife's going to be so mad I bought this software. And it keeps going up, and you're like, son of a gun, how am I ever going to do this? 10 a.m. news, thank you, Adriana. And then it says, there's your reversal bar, Mark. Thank you for being so patient. And at the time of the reversal bar, whoops, I have to look at my triggers and check it out. They're split, right, TLC? This is the one that kills you. And guys, if you're one of those people that says, I'll take the trade from the triggers, you just got long. But if you're one of the people that said, you know what, I'm going to wait for an area at the triggers, you're still being patient, and you're saying to yourself, the only place that I really have is from these yellow 1-to-1s and maybe this support that's 1 tick above, right? Because the triggers are coming up. There you go. Your wife, now girlfriend? It's because you're trading from the triggers, TLC. So really the only place for me to take a shot at this one is right there above support, because these triggers are coming up. These triggers are out of the equation. Does that make sense? There's no areas inside of them. They're just floating all willy-nilly up top. The only place where I have any bounce points, any ricochet points, are down here at the synthetics a little bit lower. Everything says up, TLC. So we wait for the reversal bar. At the time of the reversal bar, I want you to do 2 things. I want you to draw a box from the top of your triggers to the bottom of the triggers. Are you comfortable with that? This is where I'm looking for areas. This is not my bounce point. This is where I'm looking for areas. So where's the highest point of support, TLC? Mid-band. It's a tick or two above, but here's the cool thing, and I want you guys to remember that, is triggers are a correction point, right? I don't have anything to bounce off in this correction point. I do have things just above this correction point. What a great place for a ricochet. And then my lowest point, TLC, yellow support, or yellow 1-to-1s, blue support. Are you comfortable with that? So from 77 to 85, this is where the market is most likely to bounce. I'm going to go like a tick or two above. Cool. So let's see if we can line the timestamps up. That's 8:39 and 17 seconds when the reversal bar started. Can you agree that we were looking for it back here at 37? We were just waiting patiently. So TLC, on this bar before the reversal bar, can you still identify the areas? Of course you can. And the triggers keep coming up, and when you get the reversal bar, it's official. And as it comes back, that's where your limit order was, right at support, a tick above those. And you're in a trade. And the reality is, TLC, is you know that it may come to these triggers. So what you're doing is you're betting that because this is above the correction point, I'm not going to miss the trade. But where does your stop have to go? If you're in at 86, your stop has to go down here at about 72. No, not at the bottom of the box. The bottom of the box is support inside of favorable large triggers, TLC. You've got to be down here where the market shouldn't go, which means that because of these big split triggers, because of the gap, you've got about $140 worth of risk on this trade. But you've got $140 risk with strong triggers and a clear path. Does that make sense? If you put your stop at the bottom of the box is where I still expect a bounce. 5 ticks below the bottom of the box is where I don't expect it to go. Does that make sense? And this is a pretty common problem with stops for new users. Below the window of opportunity, below the lowest point inside of favorable large triggers. So you're in the trade. Are you comfortable being in the trade here with the advantage of momentum? In the trade, just above support, above the correction point, all the advantages are in place. And you knew about it. You knew about your window at 39 and change. You entered the market at 41. TLC, you had to wait 2 minutes for the market to come back to you. Your stop is in place, the advantages are there, you're in the trade, and it goes down a bar, and now you're panicking. And it goes down a bar. Look how it made it to the correction point. Do you see it? I'm willing to get in just above it, but now I'm at the correction point. Pretty cool, right? Again and again, it's still in my window. Let's move the box over so you guys don't panic. It's still in the window, isn't it? It's still where the market is most likely to continue. It's still at that point where I expect to bounce because my rules are still met. Guys, this is where new users start to get scared, start to move stops, start to jump ship. And it pulls all the way to the correction point. And then it gives you a reversal bar. So we're in at 86, and watch this, TLC. Our new stop is 78. Now I've got 6 ticks of risk on it. Feeling pretty good, right? Momentum, clear path, pulls back to support inside, and now I've got less risk. And if I'm in at 86, well, it just hit your fib, your synthetic fib. So if that's what happens to you, TLC, there's a couple things that aren't happening. The first thing, more than anything, is you don't trust. You don't trust the methodology. And that's okay, because that takes time. But if you don't trust the methodology, and I want you to see this one, guys, where did that tail end up? There's our yellow box. There's our yellow box. Let's see if I can make it wider just so that it shows up. There's the bottom of your tail, guys. We didn't trade the tail. We traded the pullback to support at the triggers. Is everybody comfortable with the entry? Do you understand why we did what we did, why we looked for what we looked for, why we don't trade the tails, why we trade the pullback to support inside of favorable large triggers? Guys, this is the absolute keys to the kingdom. Understanding these very simple processes, understanding the idea of coupling momentum in a clear path so that you can buy low on a smaller, faster chart. Guys, this is exactly what you're looking for 20 days. David, I'm going to answer that question in just 1 second. My answer is I don't. I don't aggressively chase that because the market fluctuates all day long. I'm not willing to get stopped out of a trade because I'm scared to lose. I'm just not willing to do it. But you have to have a management plan. Hey, TLC, where did that pullback happen? I'm about to crash my Ninja Trader, guys. Damn it, you can't draw a Ninja Trader that much. That's my bad. Where did you get first from? Just curious. How did first work its way into the language? And I'm asking because I think that there's got to be very easy to follow rules. There's got to be very easy to follow rules. Okay, so the reversal bar. I got you. So that was me thinking pullback. And let me show you what I think of when I hear pullback. This entire movement is a pullback. This is a reversal bar. Does that make sense? Because I see people entering trades saying, I waited for the pullback. That's just a reversal bar. Your pullback is the extent of the move to get you back. A pullback, you did the first bar pullback. So I got confused because of the word pullback. I'm just explaining to you the way I think. This isn't a pullback, it's just a reversal bar. This is a pullback. Is a small retracement counter to the underlying trend. Does that make sense? But do you see how the language could get you? And I know this because I've watched people do it. When they associate this bar with a pullback, I see people get in right here. And I don't want you to get in right there. I'm rooting for you to get in down here. So words become powerful. A reversal bar is not a pullback. A pullback is a retracement in price counter to the underlying trend. And I know that seems like I'm splitting hairs, but what you're going to find is it's going to keep you from trying to trade that one down bar at the triggers. And then, all right, so that's entries. And we're going to talk about management, David. Favorable large triggers, man. That's it, favorable large triggers. The tighter these triggers are on top of each other, the smaller the window of opportunity, the least amount of risk you have on a trade. The more they're spread out, the more indecision is there. And guys, this picture was taken in the classroom. Somebody posted it, and I just liberated it so that we could have it. He said he moved a stop behind the pivot and he was knocked out. He put a stop behind the pivot and got knocked out when it went to the correction point. And that really kind of exemplifies exactly what we mean when we say the correction point, right? Give it something to bounce off of. It's gonna make your life so much easier. So Everything that we do is a path. Everything that we've just talked about is a foundation, guys. 100%. We talked about direction. Is the market going up? Is the market going down? And we're keeping it kind of opinionless. If the market is going up, well, then I need strong triggers to the upside. And if the market is going down, then I need strong triggers to the downside. And that's really should be a non-negotiable. And then if I have strong triggers to the upside, I need to make sure that price didn't reach an area with all my triggers below. So with an uptrend and strong triggers, I need smalls and large above the area. I need to make sure it didn't reach the next area. I need to make sure that path is clear. And if I have this that led me to this, that got me here, then I'm going to take a pullback to support inside of favorable large triggers. So guys, the process leads to the money, not the other way around. You wanting to be rich isn't going to make you rich. You following a process that's been proven to win more than it loses is going to be where your advantage comes from. And guys, this is a look that has been proven to win more than it loses. This is a look that if you went back and took 100 trades, you're going to find 70 to 80 winners. And if you go back and look at it when the market is still, it makes it easier to catch it in the moment. That's why we use the spreadsheet. If it happens, TLC, I'd be happy to. But we're not there yet. We're not to the live markets yet. So I want you guys focusing on the path. Give yourself time to learn to read it. Ask a million questions, post a million pictures. And TLC, I'm going to tell you though, watching me do it live won't make you a better trader, because if you don't understand the pieces to the puzzle, watching me do it live isn't going to do you anything. You can go to the YouTube channel and watch John Novak take live trades all day long if it's helpful. If they set up during class, I don't mind taking it, but it's not going to make you better. What's going to make you better is understanding the looks and studying the looks and making sure that in the moment you can catch the trades. Let me get my NASDAQ up. And while I'm doing that, guys, I'm going to give you your plan. This is the KISS plan. This is the Keep It Simple Sunshine plan. This is the best of the best, guys. This is your stepping stone in your learning journey. It's designed to optimize your chances of success with the high probability trend trade or the 50-50 trade, that medium probability trade. Through stimulation, study, class feedback, continuous practice, you're going to be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That's an AI-generated way of saying you're going to create your trading plan based on your ability to read the indicators. That's it. So your simple plan is a brand new user. Guys, if you're not profitable every day, if you're not winning more than you're losing, if you are struggling with management, the KISS plan keeps you focused. The KISS plan keeps you focused on the best of the best. And the simple plan starts with don't fight the large chart. Just don't do it. Large chart leads the way. Large chart is the money that moves the market. Large chart is the forces that be. If you never fight the large chart, it's going to pull an awful lot of losers out of your day. Define your entry point. Define your entry. I can't stress that enough, guys. This is your entry. Trading is a solo sport. And if you're a brand new user and you're working on consistency, your entry should be the high probability trend trade. Use the checklist. Was there a termination that reversed the market? Were there strong triggers? No terminations in an area for entry inside of favorable large triggers. I'm highlighting the important stuff here, guys. If there was, well, then enter the market. Get in. Because it's a high probability trend trade. It's a trade that typically wins more than it loses. It's that trade that creates confidence. Guys, here's a checklist. Let me drop it in the room for you. Police yourself. Write these rules on the chart. Make sure that every time you take a trade, you're giving yourself the best chance of success. And then David, here we go. Once you learn entries, you've got to manage, right? Guys, my management may not be your management. My management may be more aggressive. My management may be more laid back. My management may be quicker profits than you're willing to take. My management may be longer holds than you're willing to hold for. It has to be your management. So in the beginning, while you're learning to read your indicators and learn to trust your charts, guys, it should be just as easy as your entries. It should be just as focused and mechanical as your entries. And then your management plan, you will craft a plan tailored to your personal goals based on your experience reading the indicators. Through simulation, study, class feedback, and continuous practice, you're going to create the management plan that works for you. David, that may mean aggressively chasing stuff. For other people, it may mean holding for bigger moves. Did David leave? Okay, that's all right. So guys, your management plan revolves around getting in where the market is most likely to continue. Your management plan as a brand new user revolves around putting your stop where the market shouldn't go. We just covered all of this. If you have questions about it, I need you to ask. This is it, and there's nothing to do from here, guys. Either the market's going to be wrong and hit your stop, or they're going to give you a reversal bar. They're going to start to head the direction of the trade, and you're going to go 2 ticks above it. And that's it. You're not going to touch it again. You're either going to get stopped out for a smaller loss, or it's going to go to your first target. And your first target is only $100 for the new user. Good morning, Miss Cindy. Why is it $100? Because with momentum and a clear path, $100 is pretty easy to hit. Because with momentum and a clear path, getting to that first target builds confidence. It makes you feel good. It slows your heart rate. It dries your sweaty palms. And then we're going to add on to that by going break even. $100 break even, nothing to lose. You've already been paid. Life is good. And it's going to allow you to trust the large chart, all that momentum to get you to the next target, guys. And the next target's only $200 in the distance. And if all that momentum and a clear path pushes you to the next target, well then congratulations, you're up $300, guys. You're probably halfway to your goal as a brand new user. This is the most pragmatic approach to management that I know of. It's nothing more than if-then. But you have to know what kind of trade you're in so you know what kind of management to use. That's the management plan for the high probability trend trade. If you take one of those 50-50 trades, one of those medium probability trend trades, well then you've got to get out at the first trouble spot. Your ability to read charts is going to identify that. You've got to take quick profits. You've got to get break even, guys. You can't sacrifice momentum. It's a different trade. So it's important that you understand what type of trade you're getting into so you know the rules for entry. It's important that you understand what kind of trade you're getting into so you know what sort of management that you need to use on that trade. And this is it. This is simplicity, guys. This is 2 trades. 2 trades keep you busy for 30 days, turn you into a chart reader. And then once you're a chart reader, you may find a lot more trades. You may find trades that revolve around momentum. You may find trades that fight strong triggers because of termination conditions. You may find trades that just simply aren't high probability trend trades, and that's okay. It doesn't have to be a high probability trend trade. So I've got weak triggers. My rule number 1 isn't met. I do have a clear path, but I don't have areas inside of triggers. So TLC, so far the rules aren't met. I can't find you a live trade there. Let me open up my S&P. While the S&P is opening, guys, whoops, that was the wrong one. I just opened the Russell. It really doesn't matter because these patterns work on every market, all the time frames. But I'm going to open up the S&P real quick. That's the Russell. There's the S&P. Maybe it's crude oil that I need to open. I'm going to open up crude oil. While crude oil is opening, guys, I'm going to take a little break. So go stretch your legs for a second. When I come back, we're going to look at your charts. We're going to answer your questions. We're going to look at the live market and see if there's odds favorable momentum and a clear path and whether or not it pulls back to an area inside of favorable large triggers. Is that it? Are we up? We'll see what happens when it sorts. TLC, this might be it, huh? Rule number 1 is met. Strong triggers. Rule number 2 is met. Clear path. It's close, but not quite. I've got a window from 46 to 50. Nope. From 46 is my lowest point of resistance inside of triggers. 55 is my highest point. But if I smack a fib TLC, we're not going to do it. So my job would be to activate a sell limit right there, right below the lowest point of resistance, right inside of triggers. And if I hit a fib, I have to cancel this trade because then my path isn't clear. TLC, does that make sense? Got my reversal bar, my lowest area inside of triggers. That's it. It's the mid band. Whoops, but it went without me. So guys, I'll be back in 5. When I come back, we will get moving. We'll keep looking for opportunities. Back in a few, guys. Hi, bone jumper. Well, hello. Hello. Did you eat your breakfast today? Did Mama give you a strawberry? Did Mom give you a strawberry? You want a strawberry, baby? You want a strawberry? Let's go. Yes. Oops. Can't have a thought. You want a strawberry? Strawberry. Yum. All right, guys, let's get back at it. Weak triggers at a divergence low. Guys, this is a termination condition. And the reality is we don't know whether it's going to bounce or whether it's going to break. So it's okay to do nothing. Weak triggers, but the path is clear. And then let's see, final one. Strong triggers, but we didn't get through support, right? And it's being problematic. So what we're going to do is I'm going to go up to the top of the room, guys. I'm going to take a look at some trades that you guys posted. We're going to talk about advantages. We're going to talk about what it is that you saw, what it is you were looking for. And then Paul got us going last night about 9 in the evening. And guys, if you post at night, I'll look at it in the morning. Paul had strong triggers. The small were through, the large were not. He knew it was a 50-50 look. Had the potential to break, but wasn't broken yet. He takes the perfect entry, and then TLC, I want you to see this one. Notice how he waits for the second correction point with the split triggers. He waits for the higher point. Guys, this is such a big lesson when those triggers split. There's no areas here. The only area in triggers is up here. So he gets in knowing that it's lower potential, takes quick profits, and divergence takes him out. He's not willing to risk. It's a great trade. It's catching a little bit of money to see if an area breaks. That's all it is. And with those split triggers, his entry at the higher place makes more sense. Nice job, Paul. And then strong triggers for the win. Everything says up. The path is clear. There's your pullback. Place a limit order at the large and synthetic trigger. And then Cav, this is where I want you to focus on language just a little bit. Your entry is perfect, but I don't want you to discount the fact that you waited for the pullback to the mid-band inside of favorable large triggers, because place an order at the large and synthetic trigger. And guys, this is where language, and I'm going on a language kick today. This is the large and synthetic trigger. This is the area inside of those triggers. Does that make sense? And this is just a consistency piece, guys. Always using the same language, always addressing the same look. And what it does is, guys, your brain believes you. Have you guys ever heard those things where people are like, if you tell yourself that you're stupid, your brain believes it. If you tell yourself that you're smart, pretty, whatever, your brain believes it. So if you tell your brain that your entry comes from triggers, not from areas, you're going to find yourself taking trades at triggers. Because if you say it enough, it becomes truth. And we don't want that to be your truth. Great trade though, Cav. Beautiful trade. Momentum for the win. And then this is one of those ones where this isn't an exit at all. This is maybe first profits, because this chart is screaming. Absolutely screaming. But there's never anything wrong with getting paid. What do I say when I talk to myself? Do you want to know the truth, Bob? I'll talk myself through this picture. I struggle with imposter syndrome like everybody. But when I'm trading, I say that the trend is down. I say that my triggers are nuclear strong to the downside. And I say there's a termination condition. And I say to myself, no more shorts. That's it. That's all I say. I say my triggers are strong. I reached a termination condition. No more shorts. And that's all I can say, because my plan says, and my plan isn't Cap's plan. My plan says never, ever, 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 no, fight strong triggers on my large chart. That's what my plan says. My plan says don't do it. It's financial suicide. It doesn't mean that that's the gospel truth. Did you catch that, Rob? But that's for me. And here's the beauty of it. And man, when I saw this trade, I thought Ron is going to be so excited. Let me throw you the chart read now. Whoops. So here's the second side of it, because Cav isn't me and I'm not Cav. Cav's an unbelievable chart reader. And Cav says that that's a bad top. And when he has a bad top, there's always the chance that it's going to go back up. And Cav says that one-to-ones are a very powerful termination condition and will probably at least create a bounce. And Cav says that I'm not just going to jump in, but if I get a loss of momentum on my smaller chart right at a termination condition and prices on the other side of these small triggers and my small triggers roll, he says, well, hell, I'll take a quick little entry and fast profits just to get up to the mid band. And Cav, It's beautiful and it's brilliant. And that is the counter trend trade to the reversal bar marker that shouldn't work, a la Ron C. So it's important that you guys realize it has to be your trade. It has to be your rules. And Cav, did I run through the rules about how you heard them in your head? And this is why you have to post in the room, guys, because it's annoying sometimes, but I know exactly why Cav took that entry. And if Cav knows exactly why he took that entry, well, then it becomes repeatable. Then Cav can do it every day. Then Cav can capitalize. And the only thing that I ask when I see trades like this is, Cav, where was your initial stop? How much down movement were you willing to accept before you jumped ship? Because management has to be a part of every trade, right? So if you're behind the pivot, that's a ton of risk fighting triggers. Maybe he sees something up here, and you don't have to tell me, but that's what I want you guys to do is every trade that you get in, every rule that you create, every entry that you take, you have to have a management plan because hope will absolutely rip you up. Nice one, Cav. And it would be easy for me to just pick on fighting momentum. It'd be easy for me to say everything's a downtrend, but it's more advantageous for everybody to understand that once you learn how to read charts, doors open. Termination creates a full reversal, provides strong triggers directly into a termination condition. Cav knows it. Cav says, man, that's as terminaty as it gets. But because of the strength, because of the tiny window, he says, I'll take a shot. I'll make a couple bucks. And you have to decide, is it worth the stress? And there's people that it is, and there's people that it's not, and I don't really judge you guys on this one. And then Gino says, got a long on a pullback with consistent but not strong momentum. Took a shot with 2 contracts, exited all the way to resistance. Not a high probability trend trade. Glad it worked. Gino, solid. You have an established trend and you let it break the trouble. You're missing, no, you're not missing triggers. You've got them all here. The only thing I would ask, and once again, is where does your stop go? Where does the stop go on this trade? That's the only thing that I would ever ask. So make sure that you have a management plan. How far were you willing to let that retrace before you jump ship? And guys, I'm not asking you to give me your plan. I'm just telling you. Nicely done. Taking advantage of an established trend. Understanding where the market was likely to go. Gino, great job. Can you guys hear me? It's real quiet. Just want to make sure. Large chart had odds favorable momentum. Grant got long down here. I wasn't in front of my computer, so I took advantage of the momentum up to the areas. That one was for Ron. You guys teach me as much as I teach you. I promise you that. All right, Haji, look at this. I'm not skipping you. Here we go. Good enough bottom. What does that mean, good enough bottom? Good enough. Good enough bottom. Is it a strong bottom or a weak bottom? Where? What bottom are you talking about? Because that looks like a termination that created a full reversal, doesn't it? No, you don't have to oops, you're good. But I want you to see. That's a strong top. Termination creates a reversal. And it was perfect all the way down to the termination. No triggers through that created the reversal. So you're taking a 50-50, right? You're anticipating this area to break. You did have a divergence. Your entry is perfect. Your stop is appropriate. And you get the hell out because it doesn't seem to be following through. Haji, I love this trade. It's aggressive. And of course, it's an arbitrary stop, isn't it? It has nothing to do with logic. It's still inside, and it's right at an area inside of triggers. Look at your entry here. Look at your stop there. It's the exact same look on the large chart. It's easy to look at CL. It was break even, and that's your rule. If that's your rule, then that's perfect. Then you just got to be willing to take it, huh? What am I looking at, TLC? Let's snapshot it. If that was your rule, then that was a great rule. Bad bottom, right? Not a termination that creates a full reversal. Let's just do the chart read together. It is into the mid band, not quite to resistance. Large triggers aren't quite a full bar away. So if I got a reversal bar, TLC, in the moment when you asked me to look at it, there's your highest point of support. There's your lowest point of support. See how the triggers are split? That's kind of ugly, isn't it? And then I like that you said, let's let it break. And perfect patience, man. And you really couldn't have done that any better. So let's let those small triggers get up above resistance, right? And if it's going to be one of those 50-50 trades, let's make sure that you have momentum. Let's make sure that there's no divergence on the small chart. Let's make sure that your window of opportunity is very clear, very, very well defined. Great read. Nice job. We'll come back to it and we'll see what it says. But TLC, that's it, man. Being willing to say no when it's not perfect. And Haji, great job following your management rules. That's hard to do when you get into the trade, when you get emotional. And you're like, oh, I just want it to go. And you're like, dang it, my rules say get out. And then Miss Debbie, happy birthday to you. Strong triggers, 50-50, beautiful entry, quick profits, second divergence, you take an exit. Like a scientist. Absolutely beautiful, Miss Debbie. And then Gino. Had momentum. Had an area broken, got in at 1-to-1s. NASDAQ did its thing to me. All right, so Gino, let's go through it. Termination creates a reversal. I love it. Are you with me, Gino? Are you still in here? Gino's not in here. Yeah, he is. You've got great momentum off of that good bottom. I absolutely love it. But we are 50-50. Are you with me so far? He may not be here. Who are my NASDAQ traders, guys? If you're my NASDAQ trader, I'm going to teach you how to not lose this trade. I'm going to teach you how to not lose this trade. When price reach these yellow 1-to-1s, look at the small triggers on your small chart. Define the strength of those small triggers, please. Just of the small triggers. Can we say those are absolutely screaming to the downside? Does everybody see it? So here's the deal, guys. On NASDAQ, I feel like a broken record some days, but that's okay. On the NASDAQ, Your large chart is a 34.5. Your small chart is a 13.2. So let me go to a 13.2, 5.1. Are you guys going to fight these triggers on crude oil? Is anybody going to go short into those trigger lines on crude oil? Probably not, right? Because when you look at the large chart here, you're like, holy shit, pardon my French. I'm not going short on that. That's silly. I almost said stupid, but it is. It's stupid. So on the NASDAQ, guys, what happens is this is a 13.2. Those are those triggers. And if you thought you were going to fight those triggers, more often than not, you get run over. So when we talk about NASDAQ, and Gino, I love your picture, man, and I love everything about the trade. I think it looks great. But what happens on the NASDAQ, I call it the NASDAQ. I think we should call it the NASDAQ from now on. When I reach the area in question, all I'm doing is I'm looking, where are my small triggers? And guys, if they're above the reversal bar marker, I'll go at the area if the rules are met on the large chart. Give me a Y if you're cool with that. When I reach my area, if the small triggers are above the reversal bar marker, I go at the area if my rules are met. That's it. It's that simple. So the flip side is, if I reach the area and the small triggers are less than a full bar away, I'm going to sit on my hands and wait for a second. Is everybody comfortable with that one? Guys, I blew out 10 accounts learning this lesson for you. If the smalls are down strong, look how they behave as resistance. And Gino, this is what happened to you, brother. This is what happens to you guys on the NASDAQ, is you fight those small triggers and they just don't work. They say, be patient, be patient. The large chart looks good, but on the small chart, just be a little patient. Just sit tight for a minute. And then when you get a close on the correct side and the rules are still met, guys, it's money time. Get to the correct side of that fast-moving indicator. I just can't even tell you how advantageous that is to be able to have that, to be able to have that little piece right there. It is, and it's not muted, Tony. So Gino, when I look at your chart, brother, bravo. Everything about it said beautiful. Everything about that chart said, hell yeah, let's go long. Except those small triggers. Except those small triggers. And guys, this is your patience piece. And look how it never says go. I love it. I'm telling you right now, I avoid so many losers because of that little patience piece, right there. So I love trading the NASDAQ, guys. It's the only one I trade, but I see people taking that loser time and time and time again. And for whatever reason, maybe I need to say it in a different language, people still fight those small triggers. Everything says up. The triggers are wide. The strength is great. Cav says, it's got a good shot of coming back here, but let me be sure. And he gets to the right side once again. And look how easy it is. With all that momentum, look at how easy it can be, guys. Strong triggers for the win. That's okay, Andy. Rob, patience is a paramount for life. When it's right on the NASDAQ, it's right. When it's not right on the NASDAQ, it's not right. Areas stop the NASDAQ, without a doubt. Termination conditions kill a NASDAQ trade almost instantly. Small triggers against, kill a NASDAQ trade almost instantly. So if you're one of those people, it's like, I'm going to go short at resistance. Even the small triggers said don't. And then you could also use that for management, right, Cav? You could say as long as the bars are outside of these small triggers, there's absolutely no way I'm exiting this trade until I get a close on the other side. I've used that one before too. But that's kind of next level. Beautiful trade, by the way, and great patience. You knew that it might go, but you said, why not just confirm it? And there's nothing wrong with that. Great job. All right, Haji. Could this be used as an entry on a 50-50, or is this a partial fib, a termination condition? What's the significance of these partial fibs? Great question. You'll notice that that partial fib started printing right at noon. So what that is, Haji, is that is a fib update. So your software is designed to update every 2 hours, to go back and recalculate, to go back and remeasure every swing in the market, the ups, the downs, and all of that. And at noon, at 10, at 8, you'll get these recalculations. So this is literally them saying, man, it looks perfect. Surprise, it's noon. Here's a recalculation. Sometimes they stop the market. Sometimes they don't. So it is an area. But you would have been in the trade probably before you ever saw it on the large chart. Does that make sense, Haji? You probably would have been in the trade before you ever saw it on the large chart. So this is one of those ones where when you see it print on the small chart and divergence prints, just know that if you're in up here, you may have to manage if things go awry right here. I hope that's helpful. But yeah, that's the fib update. And notice that it extends from that point. It was brand spanking new. Shiny new fib. Great question again. Guys, keep this stuff going. Y'all are the reason this class is good. It has nothing to do with me. I just flap my gums. And Adriana already left. I wish you would have told me. All right. So let's do a couple things on this one. Cindy, I want you to tell her everything I said. The first thing, the first long, entry, 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 entry. The triggers are down. The large are down. No reason to go long there, right? She fought everything and she lost. And then she said, wait a minute. That's momentum to the downside. I just got turned around. Nice recovery. But it's a 50-50, right? So you have to be a little more aggressive. Quick profits are okay. And because it's not a good top, she's absolutely right. It's momentum to the downside. I love the stop. I love the targets. I hope it worked out for her. The long was wrong. The short was a nice recovery. And guys, you're going to do that sometimes. You're going to take a long trade or a short trade, and you're going to say to yourself, holy crap, that's not the right trade. And it's okay to exit if you do that. Who was this? This was Grant. Green chart, strong small, strong large, everything says up. Break the mid-band, pull back to the mid-band, and just ride that wave of momentum. And then Grant, beautiful. And look at how the bars and that momentum keeps going. And that's such a great way to work those charts. As long as that momentum is screaming, as long as you're on the right side of those smalls here, and this is this strong, it's good stuff. Man, I hope you have a good time on the beach today. Oh, and Ron, I almost got you. I shot an 88 yesterday. Well, I shot an 86, but it was only a par 70, so I'm calling it an 88. Almost got you yesterday. I've almost got my process down that's yielding results. And guys, I think that's all the pictures. You guys did a great job. So there's your bad bottom on the NASDAQ. Bad bottom, termination, flat triggers. Look at the strength on the small. Does everybody remember this lesson? Can we get like a hallelujah or a yowza or anything that says don't fight them? especially into a termination, right? There's your first close on the right side. Doesn't change the fact that it's into a termination, but that little bit of patience, guys, if you were convinced that long was the way to go, isn't that awesome? Isn't that amazing to trade with the momentum? Isn't that amazing with no divergence and strong triggers that you didn't get in at the mid band or the 1-to-1s? You let it hit support right at all your triggers and took the close above. And I'll be damned, that was a pretty easy winner. Anybody catch that? Did that new lesson save anybody? Rob, let's see what we got. Ooh, you almost have your charts all together too. Strong triggers headed up, wide, getting wider, waiting on the pullback. Haven't seen it yet. Rob, there's a chance that you haven't seen it yet because your small chart is not current. See that arrow? And notice how there's no black highlighted. Your small chart's pushed over, so you can't see it. Give me a Y if you recognize that. You need to click that arrow. And then, Rob, somehow you've got the wrong template again. So on your small chart, I need you to right-click and go to Templates, and then Load. And I want you to pop in that 5-1 Renko bar chart, because what that's going to do is it's going to give you the large and the synthetics. Did you notice that you didn't have synthetic triggers on that chart? That's when you get better at the rules too. You'll recognize that. I'll bring it back up. Check it out. All you have is large. You don't have synthetics. And you really don't have any fibs at all. Do you close down at night? End of the day, do you close down your NinjaTrader? Yes. Something doesn't seem right with no fibs. I see fibs back here on this chart. That's your 5-1. That's a 5-1. Do you notice that you have two 5-1s as well? And why are you in May? Oh, Rob, here we go. So where it says 0524, that should be 0424. We're not in the May contracts yet. That doesn't happen until the 17th of this month, May 17th, St. Patrick's Day. So you should be CL 0404. You're going to find a lot more action in the most current market. I love the look on the large chart though. Weak triggers at a fib, no reason to go short, right? Strong triggers, split triggers, not the best look, right? Still 50-50, one divergence. There's two divergences. Should we see if they pull back to the synthetics? Especially from the bad bottom. TLC, I'm trying to find you a high probability trend trade, but the market's just not giving it right now. But I do know that these areas aren't in triggers. I do know that two divergences on a 50-50 is problematic. I also know that when it's coming from a bad bottom, things aren't pretty. So we kind of have to wait a minute and see what's going on here. Are they going to pull back, suck back to those synthetics? Are they just going to run from here? My small triggers are down. That might be it. That's an ugly look though. I don't care for that look. It doesn't fit my rules. Not even a little bit. All right. Guys, that's all the pictures that we have for you right now. Crude oil is in a grind. S&P is coming off of a termination condition. Things would have to roll a little bit, right? What do you guys want to talk about? What's got you vexed? What's got you worried? What's got you wishing that Mark would talk about it in class so that you could become better at it? Because that's what I want to talk about. Let's search. And then TLC, since the market's not quite given it yet, there's some videos where you can watch my brother taking entries, going through the process, if that would be helpful for you. But he actually goes through and walks through it in a lot of those. Pedro, you put one in. I'm sorry. Oh, there it is. I got you. You said you got caught by a new fib also. No, you didn't, brother. It feels better saying that you did. But that new fib was there 3 or 4 minutes before you ever got there. And honestly, that new fib, 1538, yeah, no, that was there for a while. Here's 1538 right here when it popped up. There's 40 where it bounced off of it. There's 42 where you took an entry. I'm not sure that it got you. You may not have noticed it because you were looking for your entry pretty early, which is that anticipation. Great question, Kenny. And there is no sorry. There is no sorry ever. It's 100%, man. Anything you need, I got. So it may have been there for a little bit, Pedro. And that's it right there. The fib would have canceled it. And then on the NASDAQ, when it pulls back and you got to that support right there, small triggers may or may not have been a full bar away. It looks like they were less than a full bar. So that's that newer lesson that we threw in the room. Not really a newer lesson, but the one I'm hoping people remember. And then it just never gave you a shot ever anywhere in there. It's a pretty good look. It just, yeah, it was there for a little bit and it got you. And then these strong small triggers probably fell back too. And then Kenny, let me answer that for you. So the idea, and let me do this. Let me pull up a great picture of an entry. And first of all, welcome to the room, man. It's nice to have you. Thank you for being willing to ask questions. Dun, 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 dun. Let me find the best picture that I've got here. Let's see if that's it. Cool. This is a good one. So when we talk about large and synthetic on the small chart, you're good with the small and you're good with the large, right? You're comfortable with that idea that this is what creates momentum. And the same is true here. The small and the large show momentum. So what we've done, Kenny, and this is just from years of research that my brother has done, is if you take the large triggers and you just kind of put them over here on the small. So your synthetic triggers, these step triggers, are just the large triggers from over here. And the reason we do that is because what it does is it creates this really tight area when they're one on top of each other. We call it favorable large triggers. And favorable large triggers means that the large triggers and the synthetics are so tight on one another that there's the smallest possible point where the areas for entry can fit inside. So if it's just the large triggers, you've only got one correction point. When you've got the large and the synthetic, especially if they're overlapping, it really tightens it up because we rely on the pullback to the correction on the large triggers on the small chart for entries, but the phenomenon happens on the large chart as well. So when the two are together right there, it just tightens up that area where that potential entry becomes. Does that make sense? Little symbiotic relationship on your small chart between the large chart triggers and the small chart triggers. And the cool thing is, and it doesn't matter if your area is in the large or the synthetic, but if these triggers were really wide and the synthetics were down here, then those one-to-ones would be a part of the entry potential too, which means that you would have a huge amount of risk on there. That's okay. Let's do it twice. Let's find another look. Let's see if we can find one where there's potentially something. And here we go. So there's your large triggers from the small chart, and they're flat and lifeless, right? There's no real momentum in them. Here's the large triggers from your large chart, which are strong and angled up. So what it does is it keeps me from trying to jump in at these ugly flat triggers, and I wait for the correction to the synthetics, to the pullback to the large. And with all that momentum, I look for a bounce point here rather than at the lifeless triggers. And then the other side of that is when they are super tight on top of each other, there's only one point where I could expect that bounce to happen. So that was kind of both of them. When they're split apart, you're starting to lose advantages. When they're one on top of the other, it gets really, really precise where that market's most likely to bounce. It allows you to reduce your risk. It allows you to maximize your profit potential. But notice when the triggers don't agree, it's ugly, it's wonky, and there's those small triggers, and the area really hasn't broken, but that's still the only line inside. So it just gives you an opportunity to have a little more precision on entries, just a little bit. And now there's your termination that created the reversal. Yeah, and you'll only see those synthetics. They're only superimposed on your small chart. The smalls are through, but not very much. That's kind of eking their head above. Ideally for a 50-50 trade, guys, we want to see 2 to 3 points of movement through the area. This would be lower risk. No divergence, but there's really only one spot. Well, there's your mid band. I suppose that's inside of triggers, but I'm not putting that much risk on a trade. If you're willing to take it at a mid band with that strength, no divergence, potential to break, there's your entry. 04 represents $100. 94 represents $200, but it's not a high probability trade. There's your reversal bar, 2 ticks above. I've got 7 ticks per contract on this trade. But that area that's not broken yet, guys, that's my first trouble spot, which means according to the KISS plan, that's my first target, and I get break even into trouble. And it either gets me or it doesn't, right? And it just got me. And that was a $60 trade. So TLC, there's your live trade, brother. 50-50 from a good top, no divergence, in at the area, out at the first trouble spot, go break even. You can re-enter if it sets up, and if it just goes up from here, well then, I don't know, you paid for commissions today. TLC, did that make sense? Had to do the read quick, but it fits the rules to the KISS plan 100%. And the goal, guys, is that you just practice this until you can do the read that fast. So let's go to the KISS plan real quick. And let's do the 50-50 trade. And this is what I want you guys do in every trade. There's your rules for the 50-50. Here's the trade that you just took. See if I can keep that kind of big. All right. One area not broken. Odds favorable, momentum on the 13-2. Did we have it? Smalls below the large, larger wide, angled in the direction of the trend. Give me a Y if you see it, ladies and gentlemen. Strong triggers. Small's outside of the large on the small chart? Well, no, I had it up here, and then once I got the reversal bar, I brought it down, Pedro. No divergence from a good top or bottom, enter at the area. My initial stop was up here. Where should the market continue? The market should continue from this line right here. My stop, especially on a lower probability trade, I'm going to have it up here. I'm going to have it 4 or 5 ticks above, because if it goes above there, I don't want it. Your initial stop, 5 ticks beyond where the market is likely to continue. That's where it's likely to continue. That's where it shouldn't go if it's going to work. And then once I got the reversal bar, I was right there. Does that make sense, Pedro? I'm not going to leave $40 worth of risk on a maybe trade. So I get in. My rules say if divergence prints, exit the trade. I never had it. So $100 or first trouble spot. Guys, I only had $60 to my trouble spot and get break even. So I followed the plan 100% and I made $60. And then if I go back to it, it never broke, did it? But the idea is you've got to learn your plan well enough to be able to execute that quickly. Roku, take care, man. So I like to ask you guys, did that make sense to everybody? No divergence, strong triggers, potential to break, in at the area, out at trouble, get break even. And then divergence prints, which means that it's not my trade anymore, guys. Now I've got to break and pull back. Split triggers, it corrected to the higher trigger. So what you really have to ask yourself, is it worth $60 to go through that? And now I have the potential to break. So you momentum traders are waiting for the small triggers to get through this area on the small chart. Once they break through, if it gives me a quick little snap back to the area, and we want to see at this bar, there's your momentum style trade. It also happens to line up with resistance inside of favorable large triggers. But this is that quick little snap when the triggers are that strong. You momentum traders may recognize this. Some of you may have it loaded up. This is that next trade, guys. And one of the things for me that makes it even more advantageous is the momentum trade works better with a range chart. And notice that you have odds favorable momentum on your range chart, odds favorable momentum on your large chart, odds favorable momentum on your small chart. That's why it's called a momentum trade. And if I give one of those up, it's no longer a momentum trade. Does that make sense, everybody? We'll see if it works. It may or may not. What if it doesn't work? Does that mean everything's wrong? What if divergence prints, because it's still a 50-50? Oh man, now I've got to splice rules. If divergence prints, I can't take that trade because it's a 50-50. Did anybody catch that? Here it comes. Oh, is it going to get me? I don't know. And then if you're Ron, the back of the bar clears trouble, everything says down, and he just says, you know what?
Order canceled.
I'll just try to ride it down to 76 and ride that wave of momentum. Did I do it? Ron already went to the beach. But there's trouble in the way. How do you manage that? We're into trouble. Probably a good time to go break even. Go. You're so close.
Target filled.
There we go. There's your momentum trade. Isn't that awesome? Large chart leads the way. Clear path, strong triggers, strong triggers. It didn't make my entry, so on the way down, I just make a couple $100. Momentum for the win, guys. Is it a high probability trend trade? Absolutely not. Did it have momentum and a clear path? You better believe that it did. It is, isn't it, Pedro? But I mean, that's it, guys. That's 2 trades inside of 10 minutes, and I'm up 260 in crude oil. Both of them fit my rules 100%. Oh, I got the spinny thing of death. There it goes. Son of a gun. You're not supposed to draw on charts like that. That's why we use the capture software. Because the more you draw on charts, the more likely they are to have that little DLL problem. So let me open them back up. And guys, what do you want to talk about? I'm trying to get all these real world examples. TLC, you wanted some real life stuff. Are you seeing it? Is it helping? We took a medium probability 50-50 trade. We managed it per the plan. Awesome. We took a momentum style trade that really there aren't even rules for it. I borrowed Ron C's rules. You're absolutely right. You just need to practice. So TLC, can I give you a little homework? And guys, this is for everybody, not just TLC. I want to take this chart. Okay? And don't worry about whose ever it was. Don't worry about their annotations. And we're just going to do it 2 charts. I'm going to get rid of all the rest of the noise. So the first thing that we're doing, and I want you to do this, I want you guys to go back to that spreadsheet. And I want you to say down is red. And if you really want to get this sooner than later, only short trades. Is everybody comfortable with the first part of it? The background is red. It's going down. I'm only looking for short trades. I'm going through the process of how I read my charts. So I have to check my triggers. Smalls below large. Momentum. Rule number 1 is met. So far, so good, don't you guys think? The market's going down. My smalls are below the large. I have momentum. And then we'll type up here. Look at the bottom of the bar. Price did not reach an area. Cleared previous. Clear path. Or clear POAF. Guys, this isn't even my trade. What am I doing is I'm taking somebody else's trade. I'm looking at their charts and I'm analyzing it. And I'm asking myself, did they have a rules-based trade? And then finally, TLC. This is the most important thing, I think, for new users to write. Entry at area inside favorable large triggers. Without this being your trade, TLC, do you see how valuable the lessons from pictures can be? You've identified direction, you've identified momentum, you've identified the path, you've identified the correct entry, all based on the rules, and you use the verbiage of the rules to reinforce it. And then here's the other best lesson that I want to give you guys. This trade lost. The trade lost, guys. He got stopped out. Anything that wins 70 loses 30. Guys, I'm a royal pain in your ass when I talk about finding. Thank you, Cav. When I talk about talking to yourself in terms of advantages, when I talk to you about annotating your charts and using the correct language, I'm doing it because if you do this enough, If you go through, why not re-annotate charts, right? Same thing. I have strong triggers. I don't have a clear path. With divergence, it does pull back, but it's not inside, right? Window of opportunity inside a large trigger after retracement on the 5-1. What to do then? Get in the market. So you can go back and you can study these trades, guys, and you can end up pretty darn smart without ever having to take a trade. Weak triggers. There's your first one with weak triggers, no divergence, but it doesn't go to an area inside. So is it going to be the fib? The fib. Is it going to be the mid band? Is it going to be the fib here? Is it going to go up to here? I don't know. And then divergence with weak triggers and still no areas inside. That's a great example of how you don't have to hope the market does something. You don't have to guess the market does something. And Dwight, did you see Cav's answer, crude oil? Crude oil is the symbol, or CL is the symbol for crude oil. And it's the 04 contract. You should have the workspace. If you have NinjaTrader 8, guys, when you downloaded the software, all of these workspaces are put in for you. You should have the NASDAQ crude, the mini Russell, the S&P gold futures. There's crude oil again, 2024. I'm not sure why it's twice. Guys, you also have Bitcoin and a daily swing for the S&P. And you will have to add the date to get the most current contract. So are you just going to open a workspace? Did you look in your workspaces? Do you have it? You should be able to just open it up and let it load. And then if you don't have it, I can save you a lot of time. Oh, so you haven't opened it in a while, huh? Yeah, it's going to ask you to roll. So when you open it up, it should give you a little pop-up that says, do you want to roll this contract? Just click yes, and it'll put you on the most current contract. And if not, just right up top, type in CL03-2 or 04-24, and it'll get you to the most current contract as well. Or if you just want to start over and kind of get everything brand spanking new, you can always go to the resources page. I did this yesterday. I did a complete rebuild, and I downloaded the indicators. And what it does is it gives you an exe file that'll put all new workspaces, all new templates. So you can go through and start 100% fresh. And if you're ever having challenges, that's a pretty good way to do it. That's a lot of momentum on a 50-50. For some of you, it was rules-based. For some of you, it was not. Resistance for the win. What do you guys think? Pretty cool, right? Resistance for the win. Whew. I might as well open up my S&P too, huh? Are you guys, you know what? Let's open up gold. Oh, never mind. My gold. Let me roll my gold and let's see if it loads up. I've never opened a gold chart before, but it looks like I don't have any data for it. So I'm going to close my gold chart. See what other workspaces we have. Mini Russell, RTY. We'll see if that comes up. Guys, the patterns are the same. It doesn't matter what chart you trade. It doesn't matter if you're trading the NASDAQ. It doesn't matter if you're trading crude oil, the S&P. A lot of people will trade crude oil in the S&P because they flow real smooth. And if there's not something on one, once you're comfortable with what you're doing, just toggle between the two. Some people will do gold crude oil in the S&P. Some people will throw the RTY in there. Some people, there's my large chart for the RTY. Some people will add the NASDAQ. Most people I've found that trade the NASDAQ don't tend to look for trades outside of the NASDAQ because the NASDAQ is a busy market and it tends to keep you pretty busy. And if you lose focus on it and you try to do if you try to do your analysis on the fly on the NASDAQ, a lot of times it'll get you. So there's the RTY, guys. This is the same thing, right? It looks just like any other market. There's triggers through. It's not a great termination condition. We've reached the mid-band. The large triggers are a full bar away. We do know that the mid-band is behaving as a termination condition. And I can't go long because price may suck back to these large triggers. This might be overrun. Divergence kind of helps with that. 3 divergences in the same price range helps with that. But the mid-band, because the large triggers are a full bar away, is behaving as a termination condition. Yellow 1-to-1s with no triggers through behave, well, not anymore. But here's the anatomy of a trade, right? Let me put in an ATM strategy. Now my large triggers are starting to come above that reversal bar marker. My strength is overwhelming. The only lines that I have are inside of my large triggers. So if I take this trade, how do you guys feel about the synthetics all the way down here? Should we just jump in and hope that this holds? Or should we be a little patient and see if they close the gap down to the synthetic? What do you guys want to do? You guys tell me what to do. I can't tell you what to do. That breaks all the rules. So you guys tell me, what do you think? Do we get in up top or do we wait to see if it closes the gap to the synthetics? This is like those adventure books. I've got no divergence, not yet. That's kind of cool. TLC says close the gap. TLC, you got it. If it closes the gap, I don't have a trade. That's okay. Tony says wait. Are you guys suggesting that it's better to be safe than busy? That it's better to wait for patterns? And look at that. It never gave us an option anyway. So we're just going to do this, guys, until somebody posts or asks a question. We're just going to do this. I have strong triggers. The mid-band is no longer acting as a termination condition, but I'm 50-50 on those yellow 1-to-1s. And I'm not coming from a no triggers through termination condition. So if I get a reversal bar, the mid-band is on the wrong side of the large triggers. This is a great lesson, guys. The mid-band is on the wrong side of the large triggers, but the 1-to-1s are on the right side of the synthetic. You guys following me? The mid-band is on the wrong side. It's beyond the correction point. The yellow 1-to-1s are before the correction point. If I were going to make a decision, which one do you suppose gives me the highest advantage of success? Which one gives me the highest probability, guys? Closing the gap back to the synthetics? We're doing that because that's what TLC said. And look how it lines up right there with 1-to-1s. So what do you guys think? There's divergence on a 50-50. It's not a good bottom. Are we going to take a shot? Or are we going to say to ourselves, divergence on a 50-50 from a bad bottom doesn't fit the KISS plan? What do your rules say? TLC, it's your trade. Am I activating an order? Joel says just hold on, right? Okay. TLC says don't do it. There's too many problems coming through. They are split, right, Pedro? And that one wasn't inside of them. So why do we talk about favorable large triggers? And let me do this. This trigger is a moving average. This trigger is a moving average. Basic, just moving averages says price is likely to correct back to the moving average. And someone gave me a really fancy term for it before. There's like a mean regression or something like that they call it. So Pedro, if I have two potential spots where the market can retrace, if this market's going to continue up, well, then I have to ask myself, if I have 0 lines inside of this potential correction, there's nothing for it to bounce off of, right? And notice how it didn't. And then if I have 0 lines in this correction, there's nothing for it to bounce off of if it corrects. So what we did here is we said, since this is just above it, maybe I'll take a shot if my rules are met. But the reality is my rules weren't met because it's a bad bottom. And it's divergence 50-50 on 2060 here. So it doesn't fit the KISS plan. I'm hoping that a mid-band in the middle of nowhere holds. So I'm okay saying that's not my trade. And it might work, and it pushed it right back up to here. But there's nothing wrong with not taking an iffy trade, right? We knew that we'd rather see it correct back here. And it just didn't. So no matter what happens after that mid-band holds, it's okay to say that's not my trade. How do we feel about a pullback now? Guys, those 3 divergences probably just confirm the overrun. What if we got a pullback now? Where's your potential entry point? Just talk through it, guys. You have odds favorable. Everything is screaming. We've smashed through the 1-to-1s. The mid-band's not a termination condition. I've got a mid-band floating in the middle of nowhere, and I've got yellow 1-to-1s right inside of favorable large triggers. What do you guys think?
Order submitted.
Do we put it above the yellow 1-to-1s? Or do we say, man, I know it doesn't really fit the rules, but it went without me last time. I better go ahead and break them this time. I'm cool with either. What do you guys think?
Order canceled.
I want to hear from you guys. Believe it or not, I'm pretty good at this. I want you guys to be pretty good at this. There's a termination. There's strong triggers to the downside, but large triggers are up and everything is above the area. If you went short, you're going short into trouble. You're counting on a termination to give you a little help. And you've got to keep the rules to be consistent. And of course, we weren't looking, but there's crude oil 50-50, no divergence, straight to the mid-band just above. And guys, this is why I want you to think of these as correction points. It might go here, it might go there. Understanding that having lines creates an advantage is huge for you guys. Look at it now. I still have strong triggers, and I have a clear path, and I have a mid-band right inside, and little 8-pound, 6-ounce fleece line. Give me a pullback. Please. Uh-oh. Man, that mid-band came up. What do you guys think? Do I have strong triggers? Guys, we got to do this fast. If it comes back, I don't want to take the wrong trade. Do I have strong triggers? Do I have a clear path? Do I have an area inside of triggers? Is there any reason on God's green earth I don't take this trade? Should I start forming opinions on whether or not what I think, what I hope, what I wish, what I want, or should I just say, rules, Matt? Come get me, run me over if that's what you're going to do. My window of opportunity based on the high probability trend trade says that's the most likely point for a bounce. That's it. It doesn't guarantee a pullback. It doesn't guarantee a winner. It doesn't guarantee that your dog won't bite you on a Tuesday. But what it does say is that I have the advantage of momentum, a clear path, and I have a bounce point and the correction spot. And it's either going to come get me or it's not. And if I enter, it's 62.6. I've got a pretty good idea where the market shouldn't go, right? Guys, this is about a 6 or 7 ticker here. Waiting for the reversal bar. That's all I need is a reversal bar. I just need that little pushback. Does this make sense to everybody? Kenny? I know it's day one, man. It's a lot to take in. The large chart leads the way. The large chart says up. It says strength. The small chart hopefully is giving me a pullback. I have one area inside of triggers. This is where it's most likely to continue. Yeah, that's the hard part because you get a little anxious over here, right? And if you trade it off the triggers, you just got run over. Guys, it's either going to get me or it's not. I have absolutely no idea. The only thing I'm ever in control of, ladies and gentlemen, is whether or not my rules are met. That's it. I don't care, Pedro. If I have odds favorable and a clear path, how many divergences does it take to ruin my party on the small chart? Do you remember? No, 3. 3 divergences on the small chart is a termination condition. Until then, God willing, this divergence might be just enough to push me down to my entry. Does that make sense? Look at your large chart. Oh, the angels are singing. One divergence, please let that little loss of momentum get me back to my best entry. Please let that divergence ruin the party just long enough to get me to a bounce point. Now, Pedro, if I get a second lower divergence, I'm going to be a little more patient. I'm going to wait for a reversal bar or something, but I'll still go long. It's not a termination condition. 3 divergences, I'm going to say, I'm done for now. Remember that the market is nothing more than fluctuations. It's just up and down ticks. That's all it is. Don't waste your energy getting excited. Don't waste your energy getting nervous. You're not in control at all. It's like being in a sinking boat and hoping that it floats. You're not in control. It's either going to sink or float. So be prepared to react, right? Be prepared to react. Be prepared to grab a life vest. Be prepared to put a limit order in. Be prepared to put your stop in the right spot. That's all you can do, is you're reacting to patterns that repeat themselves every day. If you're on day one, you're not going to recognize the patterns, but I can tell you that the best of the best is strong triggers. If you're on day one, the best of the best is not hitting a line. Oh, it's so close. If you're on day one, you're in a trade and your stop is where the market shouldn't go. And from 62.9 to 63.9 represents $100 worth of profit. From 62.9 to 64.9 represents $300 worth of profit. Do you think it's an accident that it bounced so hard right off the mid-band inside of triggers? There's your first profit, guys. We're break even on the trade. Congratulations, that was a 4 lot too. You just made $300. And now who cares what happens? Who cares what happens? It's either going to stop me out break even or it's going to go to my second target. And the reality is I don't care. They're going to have to come get me. I'm not going to move my stop. I'm not going to chase the trade. The only thing that would take me out of this trade now as a brand new user is break even or target hit. Are there any questions about what we just went through? You had almost 5 minutes to wait for that market to get back to your entry. You had almost 5 minutes of hoping that it pulled back. And if you panicked and jumped in here, it still pulled back. And if you panicked and jumped in here, it still pulled back. And if you panicked and got out on a reversal bar, everyone else is still in the trade with strong triggers. You guys want to see if they get to trouble? Just for grins? Should we put it a tick below that divergence high? See if they get there? Maybe make a little extra money because the large chart says strong. The large chart says go. The large chart says giddy up to the upside. And you guys want to know something cool too? Is if this becomes a reversal bar, I'm going to reduce my risk even further behind that reversal bar. Because they tried to push down and couldn't, and they went back up in the direction of momentum. They went back up in the direction of all that good stuff. And you know, I think that the tick indicators on here are a little bit smaller. The money on gold might be a little less, or the RTY. But let's plot our texts and markers so we can see. I'm still in it, and it's either going to get me or it's not, right? Boom. It just got me, but there's a second lower divergence. That's an exit condition anyway. So guys, live in this room, taking the most conservative, high probability, clear path momentum trades, we're up $425. Can it be done? Ask yourself that. Can it be done? And if it can, what's keeping me from doing it? With the second lower divergence, guys, my rules say I'm not going to enter without a reversal bar. I'm going to wait for some sort of confirmation on this chart before I try another trade. Second lower divergence is an exit condition. If it gives me a reversal bar, well, I may enter again as long as the rules are met over here. This second divergence should take out this pivot. This pivot's at an area inside of favorable large triggers. Why don't we go ahead and put a buy stop in at the reversal bar marker? If it gives me an up bar here, I'll take another shot at it. I'll already have my risk at hand. Or you might just say, two lower divergences, to hell with it. I'll wait for the small triggers to roll. I'll wait for something else to happen to give it to me. Guys, I don't know any other way to teach it other than the way I teach it. So I rely on your questions if you're unclear. So Kenny, keep asking those great questions. Everything that you do should be based on a plan. You should have a written plan that tells you how you're supposed to react. I'll tell you what. If I get a reversal bar, we'll re-enter. That's awesome. And guys, when it sets up, I'll do it. When it sets up, I'll do it. If it doesn't set up, then I won't do it. But the rules here say, second lower divergence, exit your trade. If it gives you a reversal bar and the rules are still met, you can re-enter. Now my smalls are down. Everything is down. My large is down. My rules aren't met anymore. If it goes from here, that's not my trade. It doesn't fit my plan anymore. And I think what you'll find, guys, is the more time you spend in simulation, the easier it becomes. The more time that you spend just studying the looks and becoming comfortable with the looks, the easier it becomes. And if you focus on the best initially, then it's going to eliminate a lot of the demoralizing losses. It's going to eliminate a lot of the problematic issues. And it's pretty outstanding. It's not difficult, but it takes a little bit of practice, right? And what's the easiest way to practice? And guys, this is where I go into my gospel sermon for the last hour. And TLC, thank you for saying that. It's hard to admit when we have problems. And that's why I put so much emphasis on language, because I think it's important, right? What's the difference between here, watch this. What's the difference between a pullback to the triggers and a pullback to the area inside of triggers? It's the difference between a winner and a loser, right? What's the difference between entering on the reversal bar and entering on the pullback? Guys, language is very, very important, and especially when you're learning rules. Now it's three divergences in the same price range, and the third one's lower. Now there's no way you could get me to take the long. But I do this for a reason, because I talk about language for a reason, because language is the reason that we enter the trade. Strong triggers is why we enter the trade, not because the background is green. Strong triggers gives us momentum, not because it's an uptrend. Terminations are false when both triggers are above the area, not when I think the area is going to break. And entries or limit orders at areas inside of triggers, not at the triggers, or not on a reversal bar, or not beyond the triggers. There's literally a plus mark there. So I want you guys to be cool with the idea that language is so important. And look at this, three divergences in the same price range. Odds favorable momentum, momentum phase on the large chart. Once again, guys, this is one of those momentum style trades before you get to the trouble spot. And if it gets to the trouble spot, I have to cancel out. And it's pretty cool just how solid the rules are. And guys, this is RTY. You have never in the history of this classroom seen me bring up the RTY because I've never done it. But every rule that I taught you on crude oil, every rule that I taught you on the S&P happens on all of these markets. You just have to find the one that jives with you. So TLC, 50-50, strong triggers. If I get a pullback, my mid band is above the large, but my one-to-ones are in the synthetic. And if it hits the fib first, it's off the table. Does that make sense, everybody? Strong triggers, not a good top. 50-50. If divergence prints or I reach the fib, I'm not going to activate a limit order. If I get a pullback without divergence, my obligation is to sell that midband right there at the synthetics. Whoop, termination, not my trade. We might have to bring up the RTY a little more, guys. This is kind of a cool little market, isn't it? The rules appear to be being met just fine. I'm going to save this workspace. All right, so price reached support and none of the trigger lines broke. Guys, is it okay if I put in a limit order here?
Order submitted.
Should I go short?
Order submitted.
At the midband, inside, into a termination condition on a 50-50 with divergence? What do you guys think? Am I being foolish now? Or am I hoping that divergence breaks? JW says no. Whew, thank you, JW. I needed an answer. That doesn't even come close to fitting my rules. That is not a clear path. That is divergence at a fib, right? That small's inside of the large. Guys, no matter what happens next, my statistical advantage is out the freaking window here. And it may go down. Or it may go up. Let's find out. So far, momentum for the win, but I still don't have a clear path. Divergence from a fib is a pretty strong indicator. Pedro, what I do is I click on any one of my charts and I hit Shift F3. Shift F3, Shift F3. So Shift F3 will toggle in between the open workspaces. Make sure that you close your untitled workspace or it's going to blank chart you. Oh man. Termination conditions for the win, guys. How long does it take to learn to trust it? How long does it take to trust the idea that when price reaches an area and none of the triggers break, it's okay to do not a damn thing? Especially when it comes from a bad top, especially when it's a 50-50, especially when there's divergence. Debbie, the commentary was beautiful trade, awesome profit taking. And happy birthday to you. I hope today is a wonderful day for you. Actually, I hope every day is a wonderful day for you. Now the termination. Small triggers are up. Everything's gone up. Isn't that amazing? Gino, do you have RTY open? Thank you, Joel. How many days back are you? I don't know. This is the first time I've ever opened this. You learned nothing today? Cap. Have a good one. Gino, how many days back are you? You think? Be sure. Right click and look. I've got 10 days back. Do you have tick replay? Are you in Eastern time frame? Gino, this is the first time that I've ever opened this chart. I have 100% fresh data. I had a 100% clean out this morning. So that could have something to do with it very much. Show me a picture of your charts. What do they look like? I don't have any 13.2 fibs. I only have a 21.3 fib. There's some fibs up there. Oh, and by the way, guys, that was your momentum trade off a good bottom. Here we go, guys. We're starting again. Termination creates the reversal. It's a good bottom. Pedro, great question, man. Thank you for asking that. So every large chart, every large chart is going to have 3 areas worth of fibs. So if it's a 13.2 as your large chart, you're going to have 5.1 fibs, and those won't print all the way to the right. They'll actually not even print on the most current bar. They don't print over one more until the bar closes. You'll have 21.3 fibs pulled from that higher time frame, and then you'll have the native fibs. Those are the ones that extend to the right. So they're just differentiated like that. Yeah, you had 1-to-1s. You don't have the fibs. So try this, Gino, just for grins. Right click and reload all historical data. Awesome. Jen, I hope you have a good one. Thank you for being here. Looking forward to working with you. There's one line inside of the large triggers. My synthetic triggers are down. Some people ask me, well, Mark, when would you get in at a mid-band? When only the large triggers support it? When I have a termination that creates a reversal and I'm on the right side of these small triggers, that's the only time when it pulls back to the large. So Gino, right click, reload historical data and see if that fixes it, or at least gets you in the same ballpark. Sometimes it will, sometimes it won't. And then if that's not, it did not, then the other thing that I suggest doing, you can close out and clean everything out. Come on. Right there where you right click on the chart. So do you have that? If you right click on your chart, go to data series, tick replay should be checked. Make sure that it is. Make sure that tick replay is checked. That was it? Awesome. Cool. Man, it's been a good one. And we recorded today too, guys. How awesome is that? Hey, Andy, have a good one. So what do you think, guys? Termination. I'm trying to get the reversal right, but I haven't yet. I do have strong small triggers, but the large triggers aren't there. If you took it from the mid-band, you got to be willing to manage because we don't have favorable large triggers. The synthetics are down and the large are up. That's not always the best look. So that's a little less, you got to manage a little bit. Good, Tony. I'm glad. I hope it's helpful. And we're just in a holding pattern, guys. Look at that. Let's see if it corrects down to the triggers. I usually get it right. I had a volume problem the other day, and then when I was switching computers, I had to go through and do some stuff, but we should be on track now. 100%. Short-lived, wasn't it? Don't have odds favorable momentum yet. And now I'm losing momentum on the small chart, which means without odds favorable and a potential momentum loss, watch out. There's the NASDAQ, bad top, total termination condition, directly into one-to-ones. Not going short on that look, not yet. Not yet. Guys, is there anything else you'd like to discuss before we call it a day? And then, Tony, have you looked at the pictures in the spreadsheet? I know I say it every time people ask me about NASDAQ. Have you just clicked through them? Looked at them? Okay. So if you guys ever have questions about any of the pictures, I want you to post them in the room and ask me. I blew out a lot of accounts for you guys building this section. Smalls' resistance is one of the biggest things. You just see it happen. Make sure your large chart has enough momentum to break them. And guys, I think that's probably going to be it for me today. Unless somebody has a quick question, I'm going to go ahead and